But normally Tesla would be way higher. But yeah, it'll show you the range to go for, so that once you get into it, you're just get out, hop out when you get near that range. Just don't get greedy. Just get out, hop out for the next trade near that range. That's don't get greedy. Not day trade. Just get out, hop out for the next trade near that. That's scalping. You're in for like in 1 minute, 2 minute, 30 seconds, 15 seconds. So this is really helpful for scalpers, and that's what the prop firm people are. So that's what this is designed for. Then down here is the Scalp Pro meter. This is giving you overall volume for the day. This is the last candle. This is the current. If the current candle, again, we're in a closed market. That's why it's so low for Tesla. If the current candle turns blue, you hear a little ding. That means it's gone past the last candle, which means there is a move in that direction, whatever direction the candle's moving. If it was like, if you saw that thing ding and it was going up, then you'd know, like, hey, a lot of people are starting to go long. So you jump on. I antiquate it to like you're on a swell waiting for the wave to crest on your surfboard. And then you see that, you hear that ding, you see that more people are there, you see the wave coming, and then you jump on it and you ride it for a short period of time, perhaps the length of the risk oscillator, or you look at other indicators. You get better and better at seeing what's about to happen, and then you get off and you take your trade. And then this is telling you inside, like, what is the percentage? Like right now at the pre-market, everything was 100% selling, and this is a little meter showing you the strength of that selling. And that weren't enough, inside the candlestick, the red represents the sellers, the green represents the buyers. You see this moving in real time on the 1 minute when it's an open market. So watch some of the other videos, you can see. And you can literally predict, and you see when, like, the buyers are losing strength over here, and it's like, hey, sellers are going to win, and that means that stock's going straight down at this, well, like right in this area here. These are aligning up with it, So this is giving you a direction, showing you a direction to go. This is showing you the strength of that direction with this meter. This is showing you if it's stronger or weaker than the candle before. All this stuff is designed to help traders not just roll the dice, but literally know what direction the price is going to go. After you get used to reading it, it gets easier and easier to say, I know I can go this way 10 cents. I know I can go that way 20 cents. Drop in 100 shares, drop in 1,000 shares, whatever it might be. And you make that quick money and you get out, and then you do 30, 40, 100 trades, and you're making, a lot of money, small amounts from $50 to $100 to $500 to $5,000 a day or in a half hour. You'll see me do it in a half hour, but not with the strike and recoil strategy. You're usually going to see me trade 50 to 100 shares and try to get $100, $200, $300 a day, make a living day trading simply and easily, and get in and out and be done in a half hour to 45 minutes, and then go on about your life or your job or whatever else you might have. Get your car payment paid for, your mortgage payment paid for, and quit that second job or whatever you need to do until you get confident enough to trade in a larger share size anyway. So then down here you have the trend, which is really an important indicator as well, ADX trend. So that one would be one that you'd want to see if you're actually in a trend. Now, if you want to know all about these, we'll talk about this too. If you want to know all about these indicators more, there's a series about these that's put out by the $1 Million Margin Club called the Toolbox series. God, I couldn't remember for a minute. So over there, the $1 Million Margin Club YouTube channel, there's a Toolbox series that gives you details. It gives you even the mathematical formula about how they're all designed in codes and everything. So it's worth watching those if you want to get better at trading and get these indicators on your in your trading toolbox yourself. So this is interesting. This is a level 2, really the only level 2 indicator I've ever seen. And it's important to note when you start to use this that you're not actually seeing anything but level 1 up here. But because it can't Thinkorswim, there's not a way for it to transfer this to a chart to give you the readings. So the best way is to read what's coming up. But what it does do is, when the shares get large here and they're trying to sell off real quick, because it's not just one trade, then they adequate it to kind of, it's winding up. It's like, say there's 5,000 shares, then there's 4,000, then there's 3,000, then there's 2,000, and you see the volume going up, and then suddenly you know that they're about to all sell or buy, be bought up, and then suddenly the stock's price is going to pop, right? And that's really the secret of reading level 2. Usually you do it just by watching them, what's about to happen, making note of price, where you might slow down a little bit. 483.31. This is a little small for a large cap. It'll still just flip instantly, right? But I mean, you'll see many that are much larger than that. So this will tell you when that 5,000, 4,000, 3,000, this little light will light up and say it's absorbing, because your price action isn't moving. You're seeing all this volume, but this price isn't moving. When you're looking at the price on the chart or anywhere else, on your market maker, it's just not moving. It's just stalling, but volume's way up. Why is that? Because they're all being bought up or sold off, so you're waiting for it to pop. So this is going to signal you something big's about to happen, because volume's high, but the price isn't moving, and it's going to actually show you which way it's likely to go by coloring it green or red. So again, when you get used to, particularly for new traders, this can be really, really handy. Knowing that. Now with large cap and mega cap, it's not as useful as, say, a small cap, a mid cap, small cap. That's going to come into play more often, because those are really thickly traded, and this will happen a lot. On a large cap, it'll help you from time to time, but you're not going to see me have this up. I just wanted to show it to you on the strike and recoil. You're not going to have me. You won't see this up. You see me do this when I do more momentum trading on Thinkorswim. Sort of an oxymoron, because if I were to do momentum trading, it probably wouldn't be on this platform, meaning buy high, sell higher, keep buying high, buy when you have a catalyst and the stock's taken off. A lot of platforms aren't as fast as others for that type of price action. I mean, you can do it. A lot of people will use the ladder here to do it, real quick, and they get really good at it, and they keep it up on their whole screen. I don't trade that way, but I will show you this when I build it, how you can do this in a few minutes. If you want to stick around for the next clip here, I'll build a whole layout for you. And then down here, what you can expect to get and what I built, you've got a 5-minute, this is a 5-minute 2-day right here, okay? And that's to help set my Fibonacci levels. Now I have the levels locked up here on every chart. You can see when I opened this, it wasn't locked. Yeah, so these aren't locked, but you can see that there's our Fibonacci retracement. So if you wanted to, market Fibonacci level, it's always left to right. You left click and then drag, and you're usually looking for the high to low, then you left click again. And then these are creating channels or support and resistance levels. Why is it giving me that weird message? Hang on a second. Clear drawing set. Okay, yeah, I guess that's what I want to do. I didn't think I had any other drawings on there, so it was scaring me. And then this is that was a 30-minute. That's a 5-minute 2-day. Was that the 30-minute? Sorry, guys. That was a 30-minute. And I do a lot of the pre-market layout. I have that chart there because on the Day Trading Volume 4, which is a book that shows beginners how to trade the open, it lists the 4 breakouts that are most commonly used. And one of them is a 30-minute breakout on the pre-market. And I find that to be my favorite, most respected level. So if I'm going to trade the open, often I will mark that level. And if you go on and get the companion book to that, it has the Holy Grail, where it takes all of the open strategies, and then throughout the day it creates the channels or the levels to really trade those breakout levels throughout the day. A lot of thought went in these. I mean, the writers of these books and all the different traders and everything over many, many, many years of trading, decades of trading, what is most commonly respected, what is most commonly used. So it's a good idea to speed up your education and get a few books that might bring you right up there. I mean, they're not always going to work, guys, the levels, but it's just knowing them. Again, once somebody tells you this is what you need to do, this will always work, this is how I make all my money, I always look for just this one thing and it always work. You need to run away from that person, because there is no always. There is no always works. It's just bull, but if you can, the good news is that it will work a lot of the time if you see a pattern. So just remember, like, hey, it may work, not always work, it may work. And I don't know, I'm not talking about a specific person. I just worry about when somebody says, buy this course, because this will always work. Sorry, I had to get that out there. Like, here's where you would mark a fib too. This is the hour. This is really good for historical data. You mark where the stock abruptly stopped and turned around. You would do that with, God, none of these are locked, because I built this thing. Just built this thing. But you would take a level like that, you might look across and smooth and see how many other places it can tap. So I might raise that up closer to that high right there, so that I caught that too. And then I would look, so that's 496. And then what I would do is I would smooth that out to exactly the even dollar. And that would be the level that I would watch closely if the price action were to come back up there. So that's historical data. It can be, on a 1 minute, a 5 minute chart, 1 hour chart. It can be on a 5-year daily chart. It depends on how you trade. But if you're scalping, you need pretty recent historical data. Like, here's another one. You see, like, it stopped here a bunch of times. It stopped right here. Then I looked across and I see, hey, it's already respecting it right there. Excuse me. So probably, yeah. See, there it is. It's 181. What it is that it came back down to the even dollar. Whenever I can get close to a whole dollar, not an even dollar, a whole dollar like that, where these levels were close enough to it that it respected it a bunch of times. You see that? I'll smooth it to the whole dollar, because people naturally, the human species naturally takes trades at whole dollars and half dollars, and they put them on their market order, whatever, they put alerts on it, and it's easier for them to remember. So again, this is just basic, simple stuff. Most people don't tell you how you can become a profitable trader just with simple information like this. Okay, here's another one, another good level I would mark here. And I don't know if it is. It's close right to the 90. If I smooth that out to the even dollar, it's on the even dollar. Look how many times it tapped. Tapped in here, tapped again here, almost tapped there, just tapped and kind of broke through. So, I mean, not everyone's respected, but boy, is that a good level to watch? Absolutely. And the fact that it's a whole dollar as well. So there is an indicator that these little white lines, that's the whole and half dollar indicator, which is usually at the bottom. That's it right there. And that's going to mark every whole and half dollar, so you don't have to draw them. And it's a good idea, and they're supposed to be made so they're not in your way as much. They're kind of light. What you see right here, you won't normally see because the market's closed. This is the market magnet. Again, watch the Toolbox series, but I have a lot about that. I have them on here because I'm going to be using them. I believe them, and this is what the 2026 Thinkorswim prop firms called for, is what you want to have. Other than this, unless you're doing momentum trading, which I'm not going to be doing. So I'll literally take that off right now so you guys don't get confused by that. So that's the level 2 breakout. And then that'll happen because I messed up the chart. So you just spread that out again and we're right back to where you were. Now it's easier to read. And of course, when I'm in the middle of action, you won't have all this stuff at once. This is showing you past history. So there's the MACD literally telling you which way to go based on EMA crossover. See that arrow? That's another indicator that's on here that's amazingly, it helps you. It's right almost all the time. So you'd want to get that one. And again, not to overstate it, the reason these are here, the reason people want them, the reason they're commissioned to be built and paid for by coders is because they work and they help traders get better fast and make lots of money. So I'll have a link on how you can get those. If you can get them in a lot of places. If you get them on my channel, obviously it helps me if you use my link. So I'd appreciate that. I appreciate subscribing, and because I don't sell courses, basically everything I'm giving away for free. Trading live is for free. I'm not having you join a group or anything. It's just all free. And then the last chart I have down here is the 4-hour. Again, a lot of people will do their historical data based on that. You can see there's another good level right around right there, right here. And you can see day after day it comes back and taps those. So if you mark it for, like, say we mark that, okay? Say we had marked this level. Oh, none of these are locked. We had marked this level right here, right? Absolutely respected it right here. Kind of respected there, turned around, you know. So here it stopped. Okay, then went around. So stopped right here, then continued to go down. So this level, the same thing here. This level got respected time and time again. Time and time again. I probably would have made it the 50-cent level, you know, 477.50. Again, guys, I'm just trying to point out simple stuff that it just happens day after day, time after time. Like if if at the 50-cent level right around there, you have it hitting, you know, to like take a scalp in there, go the opposite direction, ride it back the other way, go the opposite direction. It's flat topping here on a this is pre-market, but this is what they call a tweezer move. Remember learning the patterns within the patterns, right? So you have here, you made a bull flag here and it took off. That's when you would go in that trade on that candle, and you would have wrote it up. If you took that off the bull flag, which is right here, there's the pull, here's the flag, the second candle going up right here, say 485, you got it. You got off the trade all the way up at $4 higher. This is just an example of knowing a pattern and how to trade it. Okay, here's another one. This is another bull flag right here. Here's a pull. These, if you get the candlestick pattern playbook, it tells you there's an 82% probability that this pull/flag, if it doesn't go halfway down the pole, that this will work. So there's a little bit of a hiccup there, and then it took off. And then you look at the pole from the bottom of the flag. So that was 467.50, right? And when did the pole start? Let's just say it started here and not down there because there was a break there. So $10. So theoretically, according to the strategy of the bull flag pattern, when you go in, which would have probably been here, and you would have got scared at once on the second because that got green for a second, right? This should be going $10 from this price before the move's over. 469. Yeah, I went 20. So anywhere in here you could have got out, or just ride it till it starts to reverse and get out. That went over $20 up. That's an amazing bull flag over a period of the next day. You held it into the next week. Took it pre-market. You could have taken it open market right here on a bull flag move, and then boom, you know. There's a lot of other things that would have probably backed up that move that I'm not going to get into, but that's just a simple way to look at it. That's the candlestick pattern playbook. I have a link to that too. That's the only book that rates them. So I'm giving you gold here, guys. You know, you can take it or leave it, but this is very, very helpful stuff. So that's the entire layout. You can see how I have the market and the bid and the ask and the flat and the, you know, and if you go into here, you're going to see it's on auto send, you know. Now you can trade all kinds of different ways with brackets and things. When I'm scalping, I'm not going to do that. So I'm going to go ahead and show you guys how to build this next. So stick around and we'll be doing that next. Hey everybody, this is the professor. What we're going to do today on Day Trading for Success is we're going to build the new 2026 layout that's being used by all the professional traders here in the studio, as well as the prop firms. Now, there's a lot of custom indicators used in this. What I'm going to do here is just build you basically the grid and the layout. It's up to you what kind of indicators you want to bring into it. You don't need to have any of them. I think they're helpful, but that's up to you. So it's on the default right now. This is what it looks like. And then the first thing you're going to want to do here is you're going to want to go to the setup wheel. And let's just pretend I already clicked that. I'm going to drag this over because it would show my account. So you go down to look and feel. Okay, and now you're going to want to change it. It depends on what you like, but everybody here does dark, a darker thing, and we go to old school layouts, particularly specifically because of level 2 is easier to read right there. Okay, so I'm just going to apply that, and now that's in. Now I've opened up this little side window here, and this is how it would come on your default, but let's get rid of these, and we're going to build this back with scanners in a minute. So we'll probably just start with that actually. So if I wanted to do watch lists here, I'd open it up, and I have pre-saved watch lists, and really we're going to want to get the ones that I would use for trading the strike and recoils, the live trading. But these are used by many professional traders right here. Like this is the one that they sell you over on Warrior Trading for a fortune. This is another one like that. So these, if they're not exactly the same, they're very, very close. So you can get those for far cheaper or free in most cases. So let's load the first one. Okay, and we're going to go ahead and make it. I'm going to make everything green so that they all link together. So then I'm going to open a couple of others that I'm going to be specifically using for trading the strike and recoil strategy. Okay, so there's the next one, and let's do, actually I think I only need those two, but let me just take another look here. No, I'll use that one too, the 50K. So those three will go in. You can see the market's closed right now. Now this is what I'm going to be using when I live stream. So if you want to, you can trade with me live stream for free. Make sure you subscribe, which helps me anyway. Please subscribe if you think you're getting useful information, and then set your alert, and then you'll be alerted when I'm streaming live for you, and it's free to come in. And obviously I recommend you seek the advice of a licensed financial advisor. I am not licensed, so that's my disclaimer. You need to take responsibility for your own trades and do your own
I just finished developing the first stock trading tool of its kind, designed to help you dial up or dial down.
Unless they're a licensed financial advisor, you should not trust anybody. That's just the way it goes.
I just finished developing the first stock trading tool of its kind.
So anyway, this is all I pretty much do. I might open the message center in here too, basically so any of the trade messages won't come on.
I know I'll be going live next month streaming.
If you want to catch that, make sure that you stand by for the date, guys. So the next thing is charts. So mine's going to open up on the flexible grid. This is how yours might open up.
Let's go over this.
Right over to flexible
this is a 1
grid,
minute chart with a bunch of custom indicators. This is a reduced day chart down here, and it shows, importantly, it shows our ATR levels that I figured out, low, high, the average true range based on Wilder's smoothing formula. You look at the close of the day before, which is right there. You subtract that 831 that was right there in half. You subtract half from the high to get the low, and add half to get the high. That gives us our total range. Looks like we blew through it already, and then I marked half and whole dollar levels here. It's a little bit different than normal because of some of the confusion yesterday. Let me open a 10-minute, a 5-minute 10-day chart. So these 5 M's were marked on a 5-minute chart, and if they were even and half dollars that were near historical data or on historical data, I made them a different color. Basically, because now I'm going to build this. That was the quick way to get the grid to build everything I want. Now, obviously, guys, you can do this in a different way by having more screens around you. I'm going to try to make it for all those people that only have one screen, and there's a lot of us. You can put the general information you need on one screen, but if you want it really, really big, then maybe you want to slide charts over, and move things around. And if you're slowing down your computer too much, remember, every chart you open is going to slow things down. Okay, so the more and more data that you put on it. Okay, so let's go ahead and link all these green. It's going to automatically do the default, which is a chart. Give me a second, we'll get this all switched.
You have to sit through. I'm not going to stop recording and recording again. Sorry, guys. You'll have to sit through some of this. You should think and reflect. All right, so this is going to be my primary chart over here, and it's going to be a 1 minute, so I don't need the sidebar. This is going to be news, so I do need the sidebar here, so let me mark news. Sometimes you have to kind of spread these out so that this fills in, so I'm just going to mark that news right now, and then get rid of chart. Remember, get rid of chart. Now I can get rid of the sidebar. And then this one is going to stay a chart, so I can get rid of the sidebar. So that's the beginning. Before I start building the charts the way I want them, I'm just kind of getting the grid in order. Now over here, I'm starting with the active trader at the top. So that's AT, active trader, this, and then get rid of the chart. So that's the sidebar has. Once you've done that, unless you're planning on really changing your layout on a regular basis, you can just get rid of the sidebar. It just takes up space from left to right, and you'll find that if you're doing this, you need as much left to right space as you can get, right? And then down here, we're going to do level 2. So we'll mark that level 2. Get rid of the chart. Let's just make sure we don't lose track of what's what here. All right, then at the bottom, this is going to stay a chart. And I'm going to make this, I'll just change it right now. I'm going to make this a 15-minute chart. Actually, time frame. No, that's not how I do this. I'm sorry, guys. I am now confused. I'm not going to change the chart yet because I'm going out of order. Okay, so these are all going to be charts. So the first thing I'm going to do is get rid of all these sidebars. Okay? So now that I've done that, I can literally take off these little square. Oops. Take off that sidebar. All the sidebars are gone, right? So I'm going to take off the grid, which is right over here, and unclick it. And now it's nice and clean. Now let's start building these charts. Okay, so let's start with this one. I'm going to expand this, and I'm going to get into this gear wheel right here and take off things like I'm reading all these things to make sure, which is what you're going to want to do, to make sure that you we can start with the appearance of, let's start with the appearance. So I like to fill in my candles. So let's make it, yeah, that's fine. We'll make it the bright green. So is that right there? No. Why is that not? Look how bright that is. And then the red, we can, if you want, you can make it a brighter red or darker red, something like that. Okay, and then you can you want to show the wicks, but you want to make sure that the everything's filled up like that. So doji can be white, yes, and then that'll change automatically. Then down here, the cursor's fine at that color. We want to make sure that these are going to be the colors down here, the ticks of the chart. And then you want the background, but again, this is me, I'm saying you want this to be like midnight black, as black, see how good that looks, and you want to get rid of the grid. Now that's going to make every chart look nice and clean, so let's get a look at that, see how clean that chart got. Now we want to change this to a 1 minute. I'm going to do it here first, but so since we're intraday, that's how you do it. So 1 day, 1 minute, say okay. Now I'm 1 day, 1 minute, okay? Now some of the other things you're going to want to do on this, especially if you're using, I'm using custom indicators, is I get rid of the volume subgraph, so that's gone. Now there's no volume down here. There will be no volume. Now since we don't have custom indicators here, I'm going to put that right back on for you. I changed my mind. All right, so it's down here. These, you can just click and slide these, okay? And now I'm not going to be showing you how to use a chart. I mean, you might get some of it out here, but I have a lot of videos on how to do that. Now I need to get the tools, and these tools will be on every chart. So let's open this. See my tools down here. It says off. I want them on each chart. Apply. Now they're going to come up with a default tools. Let's click that, and we can change these by putting what we want. So I want to change the first one to a panning tool. The reason I do that sometimes is the charts get so small. I want to make sure that's always up there to pan. And then the next one I'm going to change to the price drawing tool, which is right here. Okay, and then the next one, which I most commonly use, is a Fibonacci retracement. Oops, sorry, drawing tool, right? Stop doing that. Drawing tool. There we go. Fibonacci retracements. And now I have to add a button, and I'm going to do a trend line. And that should be down here. And then I'm going to add a button, and I'm going to do a rectangle. Now, these aren't probably used, it depends on how you trade. But a lot of times I will mark an area like that. Now I've saved these across. Now I lock them with that right there. Now these will end up on every chart. They won't be locked until I lock it, but now they'll be on every chart. Why that's so important is right off the bat, if I want to show you stuff, I click the pan and I do that, right? So now the other thing we're going to do here is we're going to put in some moving averages. Now, when I opened up that, right, which is the chart studies, because I am a coder, you are going to see things that you do not have on your normal Thinkorswim. So don't start calling them and going, hey, how come he has? It's because I code for Charles Schwab Thinkorswim. So I have stuff that's not even out yet, and then I have other stuff that's been approved and it's out. So that's why you won't see it. A lot of stuff that never makes it out, and so on and so forth. But it's one of the reasons why learning how to use a prop firm layout might really help you. But when you're brand new, it's probably not the best way to start. Thinkorswim has a lot of really good tools. Get used to it. See which ones you might want to use by watching other videos of people trading, or just slowly but surely work your way into them, because most of them, it's hard to get for free. If you type in free indicator on this channel, there's a whole bunch that are free. Most of the real good ones have kind of moved on since the free. But if you follow along with me, when I design one, before I sell it or release it to Thinkorswim, if I've been contracted to, I usually give it away free for 48 hours or so. So if you keep track of stuff, keep track of this channel. But if you go over to the $1 Million Margin Club right now, I know that they have one totally free indicator, so you might want to look for that. But anyway, let's go into the let's start off right off the bat with moving averages. EMA. Give me a second here, guys. Okay, I'm recording. I haven't done this so long because what I do is I save them and I never have to go back and click this. So we're looking for this moving average right here, right? So I'm going to click on that and I'm going to add in 2 of those. Okay, we're going to change those. That's a default on there. And then the other thing we're going to put in is in the VWAP. Some people call it the VWAP. And those people are wrong. No, I don't know. I'm kidding. So VWAP right down here. Okay, so we'll add that. Now those are really the main 3 that I use here. Okay, and they're right here on here now. So now let's change these around a bit. So I'm going to show you some stuff that's going to take a little while, but it's important to do this. So let's start with the VWAP. So the upper band and lower band I do not need. There's all kinds of ways to get rid of them. There's how I just got rid of them. Okay, so we're just going to do the VWAP, and we're going to make it a bright red, and then we're going to make it triple thick. It's really one of the most important free indicators right there. Boom. And I'm going to apply just so you can see there's our VWAP, which is at any time is considered to be the value of the stock. Okay. Scalpers don't really think about that stuff, but if you're doing a long-term swing, it's probably something to think about if you're doing really studying your stock for fundamental analysis rather than just patterns and going in and out, right? Oops, I shouldn't have closed the whole thing. And then in here, let's go back. So this default is the 9, which is easy. There's a reason that's a default, guys. That is one of the most common levels used. I see other videos where people do weird stuff, 22s, 19s, 17s. It's like, I don't know where they're getting this from. Are they trying to jump the gun on the levels? I don't know. But you know, we have a friendly friend now, and you can ask ChatGPT what is the most common. I would ask it like 3 times just to make sure. Let's do a gray for the. It shows you the color right down here. So my 9 moving average is going to be a gray, okay, and I'm going to make it double thick, okay. So that one's done. Now this is already saying 9, but we're going to make this the 20, okay. I'm just joking around with the levels, guys. Don't, you know. He doesn't know what he's talking about. This is the, you know, whatever works for you guys. We have a constant good time here in the studio, joking about it. If it works, man, then do it. You know, I'm just messing with you. Okay, so these are the 3 things that, you know, we most commonly use right here. I'll throw that out there again to be on the chart. Now, really, unless you start to get into custom indicators, you don't really need anything else on this chart. Now, if you want to zoom in, you can left click that and just kind of left click down and drag, and now I have a way zoomed in. I'll just show you a few things. If you want to go back, you can just auto zoom and it starts the chart back as far as you want. If you want to pan left and right, you know, like that, it won't go any further right now. But if you want to make this so time exit. This is at 820 because I messed around with it. So you put that at like 10, say, is pretty much the average people use, 5 or 10. Now it gives me a little bit of room to drag this way or that way. But again, we're on a 1 minute, 1 day, so this isn't going to drag over here much. But anyway, that's what you can use that for. Fibonacci levels, you click on it there, you left click, drag down, left click, and then there's your levels. Usually you go always left to right. Low to high or high to low, it doesn't matter, but always left to right. I'm just showing you some quick stuff. Clear drawing set, okay, that's gone. Trend lines, you can left click, okay, and then you drag up. Now normally when you set a trend line, you're looking for multiple touches. You know, in this case, that's just screaming to be, you know, where you would mark. So that would probably be it. On a 1 minute chart, you're not setting trend lines. I mean, obviously, it's just not a good call, you know. People do it. I've done it, but it's just very, very short term. Anyway, that's how you would do a trend line as far as how the mechanics of it, you know. And then a rectangle box, you left click and drag over and then release. And then now you've shaded an area. Keep in mind, if you do that, you can't move inside this box. See, I had the pan. You have to be outside that box to move, but you can clear the drawing set there again, and that's gone. So those are the tools that I would use and that I need, and that's your 1 minute chart for now, guys. Okay, so we'll close that up, and then we're going to show you how to save it. So here's how you're saving a chart. You left click that little burger there, you open this up, and you go down to style, and then you go down to save style. And then you can mark it in, and you could say, like, I would say something like clean 1 minute. And then it's clean because it has the minimum amount of indicators. And then I make sure that you click that, and now you've saved it. Okay, and then if you want to go back in to find it and put it on another chart, you'd go down to load style, and you can see I have a whole bunch of styles in here for different things. So, but then you don't have to keep redoing it. So with that in mind, we're going to go speed this up a bit when I load up the other ones. Okay, so down here is a day chart. So I'm going to click that, and I'm going to go ahead and open that up. And then we're going to go into, now I don't have to build this, so we're going to go into load style, then we'll go over what is on it, right? So the day chart is, hang on, now I have to find each one of these, and you guys are going to see it, and you're going, it's right there. There it is, a day, okay, day. All right, so now the day came with an ATR. Now you'd want to load that in. So that's what I loaded in, just a regular ATR. And that is just an absolute must to have on your day chart, in my opinion. Okay. And that, if you go over any candlestick, right, and then you look down at the ATR right down here, that's going to show you the price that range moved in that day, $10.50. So having that range and marking that range before you start to trade, there's all kinds of ways to do it with custom indicators and things. Yeah, I don't know if they really have it on Thinkorswim. I'm trying to remember. I know I designed a bunch for Thinkorswim. I would get one of those because they have the RV range as well as the full range. RV range is the half range based on that Day Trading Volume 1 book that everybody buys to trade large caps. So, but that's how I would just the bare minimum of setting up the 1 day before you start to get into getting cooler custom indicators. That is very useful. Now I drag that down real tight because you can just open up a chart to use it like that whenever you want to, and then reduce it by, I don't know if you saw what I did there. I left clicked here, double clicked. You don't have to go in here and say minimize sell, so maximize. So the other way would be to go in here and then you would say restore sell. But if you just double click up there, it works. Now I'm going to drag the news down because I only really need to read the most current few lines right there when I'm trading. And now I have the basic 1 minute chart. Now that's your volume is down here. So if we were to zoom in, I'm left clicking and drag. Oh, it didn't. Oh, what did I do? Now is it like messed up? Every once in a while mine just stops working, which is very annoying. So let's get that problem solved. Okay, so I had to restart and we are back. So what I was trying to show you was if you clicked on the price, whatever, you get it. You can do it with the pan, but not the pan, but the arrow too, but I don't use the arrow. You just left click drag and you can, I think I was showing you that before, and you can make that zoom up. But I wanted to show you down here the volume. It was the main reason I was doing that. And that's why I realized I couldn't do it. So yeah, so this is the regular volume you will have, and obviously you're watching spikes as these are happening live. They align with the candlesticks up here. These candlesticks align with how the price is changing, if you didn't know that stuff. And that's basically the price moving up and down makes these patterns. And this is on a 1 minute, so it'll open and close within 1 minute. A green candle opens at the bottom, closes at the top, and then the red candle closes down here at the top, opens at the top and closes at the bottom. And so that means it's going down, and these means it's going up when you had price action. And these colors will coincide with that. So that's basically, and you can move your chart by left clicking down on your mouse and moving that up and down like that too, if you wanted to do that. Okay, so that 1 minute is done. We finished the day because I went ahead and basically just, now probably you would want this much smaller, so you just left click and drag that down. Okay, and then you can set your different, let me lock that. You can set your different time frames here. You can do more than a year. You could go back like 20 years here. So you could do just, wouldn't it have been great to buy that stock back here? Look at that, huh? It's for $25 and now it's $400. Yeah, that was back in 2020. Of course, if you bought anything in 2020, since the SPY seems to almost always go up, then you'd be doing much better. That's the Warren Buffett style of trading, right? All right, so let's go into this area right here. This is your active trader. Now, if you go into this, you can see this is what basically the default is. I'm going to show you how I would set it up. Now, you can click these and then remove them, right? Or you can just left click and drag those out of the way and they'll disappear like that. So I'm actually going to use all these here. I'm going to drag the buttons up on this level. There are two levels, which I'll show you in a minute. And then I want to have buy bid. I'm going to kind of drag it over there and kind of move it around. And then sell ask. We'll put that below the bid. Okay, and then we're going to want to have, so we did flatten above. Flatten should be here. And then we want to have buy bid. So we're going to move this up here. And then we want cancel all. Not that cancel, cancel all. So I do cancel all right below the sell the ask. And I'm looking at the one I've already built up here. And now I have buy the ask. Right below cancel all and sell the bid. So just the opposite of the other two. case I have to get out of a position. Then I ended up with the reverse. Okay, so on the second line, we don't need that. So we want those two, but we want to have, this is the time of day enforced down here, so we want to have that there. Something like that. Okay, so I did that pretty quick. You can go back and look at it again, and then it's going to change the way it looks here. Let's just kind of drag everything over here like this. So there's sort of what it looks like now. When I close this tighter, it gives me the look that I usually trade with, but it also has to do with what's down here. So what I usually do and what we do here is we get rid of that. We don't care about that, and we drag the price up there like that, and we say okay, and now you have less boxes here to watch. Now this is your ladder down here, right? So a lot of things are on here too. So you open up this little gear wheel here. I don't need the oops, that's not what I wanted to open up. I wanted to open up how do I get into oh, go like that. Oh. Customize. No, that's not what I wanted to do. All right, hang on a second. Okay, I had it right. I was go to customize. So I get rid of the volume, and then I keep the other stuff, and it makes it cleaner. Then you can just click, left click, and drag these the way you want. Sell orders, buy orders. So then just get the price more in the middle. A little bit in the middle here like that. Now, if you use the wheel, you can go up and down really quick here, and sometimes you have to be pretty fast when you're setting your trades. Now, there's all kinds of other functions to this that you can do, you know, learn to use, but this is basically what you need. So I'm showing you how to build a layout, not necessarily how to operate every single tool on your layout. So this right here, you can change to be different numbers. If you go into the setup, you know, this is pretty good. You can go up and down in 50s, or if you just if you left click on something, then it will immediately go. Then it'll go down in increments of 50. I have it set at increments of 50 because we'll be doing pretty low share size for this. So there's your ladder. Now, since I don't really use the ladder, I keep that kind of closed like that, and I'm on to the level 2. And often, because my account number on YouTube will be shown, some things a lot of traders don't know about is Charles Schwab basically goes through their own broker to make the trade, sort of like their own dark pool, even though they're a broker. And if you do that, I do that, it will show my account. So since I'm on YouTube, I just drag these over. Not everybody does, but you don't really need to see those because you're not getting filled by those most of the time anyway. So that's going to be the price of the bid, the price of the ask. This is the spread is in between the two. And then this is what the market, it's closed market, so it's not coinciding, but this is the price you would get if you're selling market. That's the price if you get, or buying market, and this is the price you get if you buy the bid and or buy the ask. This is the price you would get here. Okay, so now let's go down to the 15-minute chart. Now I keep this so I have perspective. Another one not locked. I keep this so I have perspective as to when you get lost in the micro of the 1 minute. You know, I like to see what the bigger moves are. So let's maximize this for a minute, and then we'll go in and we'll change the style. I have a 15-minute already loaded, which is basically, it doesn't have any moving averages. So basically, all it is just a clean chart like that. So there's nothing for you to know. There's nothing in here, any studies. It's just nice and clean. And then that's done. And then I can see the price action. Again, all the tools will stay here and you can lock them. And then I can see the price action as I'm trading that day and look at the bigger patterns and look at if it's swaling and I'm missing sort of a trend. And I can keep that pretty tight down here and still see it, see all the level 2 and see all that. Now let's go over to these charts over here. And this is going to be a 5-minute chart here. It's going to be a specific time frame chart. So, I mean, how many days? A 5 minutes. So I'm going to load a style, and it's going to be a 5-minute, 10-day clean. Nothing else is on. I mean, I lose all this stuff and everything that's on here already, and I don't have to get rid of it. So you'd want to build them and save them, you know, and I'm not going to really show you because it's nothing. It's very simple to do it. So now I have a 15-minute, and as you can see, I'm sorry, why did I do 15 minute again? I meant to do 5 minute. Let me do that again. So load style, that's why it's so great to have them loaded. So I want a 5 minute, 10-day clean. And I don't know why this is down here still. So let's get rid of that volume. Oh, well, you might want the volume. I don't need the volume on the 5 minute. You might want it. I'm going to take it off. Just click it off right there. Okay, apply, off. And it also has some other stuff on it that doesn't look too clean. So if you want, I think I do leave the earnings on here on purpose. But I don't usually have that there. So let's get the day, the weekend's day. So if we go to there it is. There's corporate actions, and there's that's not on there for some reason. I got rid of the corporate action. I'm sorry, I'm looking for the we don't really want the options. Give me a second, guys. There we go. Show expiration. I don't need that. That should be it. Yeah, so that red line went away that was going up and down, and that little circle went away too. So there's my 5 minute, 10-day. Remember, I can auto zoom, or I can just click this over like this, drag this, left click and drag that up and down. And you have this over here. If you left click, you can move the stock. Left click on it, you can move it back and forth that way too. There's all kinds of ways to move this around. Everybody has the way they learn is their favorite way. So there's a 5 minute, 10-day. Now I'm going to open up a 5 minute, 2-day. I'm going to build. We'll lock that. Excuse me. So that's done. Now this is going to be a 30 minute. So I've already done all these. And all it really is you're going in here and you're setting the time frame for the right thing you want, right? So I want a 30 minute here. So I'm making it a 30 minute, but it's going to have other stuff that I don't want. But there's like I'm going to do that for 10 days, right? But it doesn't have the look and has all that other stuff with the candle. So you have to do the whole thing with every candlestick, all the other stuff, the dark background. So on the 1 minute, you could start with your 1 minute and then do the other stuff that if you loaded your style there, that's a good way to do it. We did a, did we just say 1 minute clean? I think we did. You could do it like that, and then you've got it all saved nice and pretty, and then go in and change your time frame. Change it for 10 days and make it a 30 minute. That's another way to do it, and say okay. And that still has the corporate things on it, which I didn't take off. Right there, yeah. Apply. Okay, guys, so then there's our 30 minute. Now I have these saved, so I'm going to go ahead and do the 1 hour now. So hang on. Style. So style is load style. And then I do my 1 hour now. There it is up at the top. And then down here, my final one I'm going to do is the drag this over a little bit, get the style here, and then I'm going to do my final one, which is a 4 hour right there. Now I had those all saved already. So now this is pretty much the layout, and how I trade it is these are shrunk down. I start at the bottom. So I can open them up by just clicking the little burger thing, right? Put this down again. If I need to mark a 30 minute, a 1 hour, a 4 hour, look at a bigger picture. And then this is the 5 minute 2-day, which is mostly set for 2 days to do my Fibonacci level on a 2 days real quick. And there's my 5 minute 10-day, which is more like looking at the price action. You know, these two things are going to tell me what's happening on a much larger than the 1 minute, so I can just kind of see what's happening. Obviously, since it's the end of the close of the market, I'm kind of making it look better with the dark. This light is the post-market or pre-market, you know, and you can see that it just goes across, you know, to the previous day. And I like it when it's nice and dark and pretty. So that basically is the layout without all the custom indicators. Okay, you can trade it this way, and that's how you build a layout. That's how you, now once you build it, then you want to save it. All right, so so you open your setup wheel, and then you say save workspace as, and then we can just call it a new layout. I'll call it clean. Sorry, I'm talking over my microphone. I didn't cap anything, but so new layout, clean, save. Now, if you go back in here, you'll find the new layout clean somewhere in here. Yeah, there it is right there. So, so that's the trick, guys. That's it to how to build a layout. Now you can do all kinds of things. There's all kinds of things, and my recommendation is you go to the education or the help on Thinkorswim up here, and there's a whole learning center here. Let's open that up a little bit. So education, it turned all white. Oops, no page found, sorry. Request not found. Help. Oh, this is a whole nother thing that you should every once in a while collect your garbage. Get that clean. That helps speed you up. I have a video that shows how to tweak your Thinkorswim. I don't know why that's not going. There we go. So they have so many things and so many videos, and so depending on what you like. And I love working with these guys and Charles Schwab and Thinkorswim. So you can just, you know, don't go by what I'm saying all the time. Go get other professional helps that work on the platform and work for Charles Schwab. And I do coding for Charles Schwab Thinkorswim. So, okay, guys. So listen, I hope that was helpful. Make sure you watch some of the other content on this rolling video, and hopefully I will see you when I'm trading and I'm live streaming. Okay, guys, go green out there. Hey, hello everyone. This is the professor from Day Trading for Success. I am the head trader here. Today we're going to be going over the strategy that we traded today, and that we've been trading every day this month to try to make a minimum of $100 and then more, obviously, in 30 minutes to 45 minutes every single day. I stream live at Day Trading for Success 8143 if you're looking for the exact channel, but I think if you just type in Day Trading for Success, it should come up, or just obviously subscribe right now. You can get alerts, and then every morning when the market opens, actually before that, I go over the stocks, figure out what the picks are, talk about stocks for different strategies, and then I trade every day. So we're going to go over exactly how I'm able to accomplish green 92% of the time, and get hopefully people go along with me as a quarterback. How do I do that? What do I use to trade? How do I decide to go in and go out? So we're going to go over that a bit today by showing today's trades that just happened, but going over the strategies that I use too. So stick around. This should be interesting.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, so welcome back, everybody. What you're looking at here is a 1-minute chart. I know it looks busy. What it has on here are custom indicators that are used by prop firms that we use here on this channel to help people decide when to go in and go out. So these are indicators that are very, very highly rated. These are the indicators that the pros use. We're going to go over what these are very briefly, and then we're going to go over how we're doing for this month every day with this one goal in mind of making at least $100 a day. And then we're going to talk about the strategy itself and why it's so successful. It's a large cap retracement strategy. But let's talk about the indicators first. The most important indicators that we look at are all on this 1 minute chart. I do have some on a day chart that we use, and I do have some on a 5 minute chart that we use as well. And we'll take a quick look at those too. But right now, the most important ones are right here. So how do you decide to go in a trade? Well, there's about 5 different indicators you can. Now, we're going to talk about the strategy and how it says to go in, support or resistance levels, obviously. But we're going to talk about the indicators that make it so simple to decide, if that's such a word I can use, in day trading. But they really help you get that edge. So you're looking to get more things lined up that say, take this trade, whether it be long or short, more things that are lined up on how you do it. And in this strategy, retracement strategy, we do basically large cap retracement. So we're looking for the stock to go one way, and then we would trade it on the retracement. And then, like if it was going up long, then we would take a short, and then as it hits a support level, then we go long. So it can go either way. You don't have to trade short. You can just do the long trades, and we'll talk about that too. But let's get a deeper dive into these actual indicators right now. So if any of you have watched any trading or know a little bit about it, you know that Thinkorswim, which is this platform right here, it has a lot of indicators that are free. Hundreds and hundreds and hundreds, and they're totally adequate. But when you get to be a professional, custom coders are the key to you to getting really that next level up indicators. So one of the things that I do is I do coding for prop firms and other companies, and I try to find ways that these codes can also be available to you, to an average trader. And that's what this layout has, and I have links to go get each and every one of these indicators if you so desire. Let's talk about some of the most important ones. So the first thing you need to know is, when should you go into a trade, right? Now this one's called the Scalp Meter Pro, and inside these blue columns, it tells you where the buyers are and where the sellers are any given moment. So you can see inside a 1 minute candlestick. This is on a 1 minute chart. See these candlesticks here? You can see the strength. See how strong the sellers are on that? Right there, they're right at the top. So the blue column represents the volume, and the red represents the sellers, and the green represents the buyers. And then this meter is going to show you another way, how strong is it right now. So it's moving right now. Okay, so you can see it moving right now with this candlestick action. It's also going to tell you a couple other things. It's going to tell you the volume of the last candlestick, and then it's going to tell you if the current volume passes it while the action is going a certain way, it's a lot stronger. Get ready to jump on in that direction. Also gives you the overall volume for the day, 51 million so far for NVIDIA. And then it has another, and then the percentage, besides the meter, it's showing the percentage. Right now it's buyer strong. You can see it's going up. I'll tell you what that arrow is in a minute that's telling you caution, caution. But I mean, these are the indicators that help you, and they're going to give different messages. So the more you use them in a simulator, or maybe just trading with one share and practice, the more you use them, the more you're going to be able to instantly respond to what they do. You see, this is actually the MACD, which is basically telling you that to go the other way. This is a really, really handy. So you had a short move up on this one, and then it said, watch out, get out, and then it called it perfectly, right? And then you saw this jump up with it. Now it's saying down really strong. So you have a downward move, and nothing's stopping that right now. So it's just a matter of reading these. Now, they're not right all the time. Nothing's right all the time. And it's basically telling you something that has just happened. It's not telling you the future. But trading with the crowd, trading momentum, I often antiquate this particular indicator to, you're sitting on a surfboard and you're waiting for the wave. And then as you see it come, you jump on. So the wave's already happening. You're just trying to catch it. All these noises you hear are different alarms of when these indicators are triggering. Now, I actually have the alarms for the different indicators sort of silenced. There's a few of them that go off, but most of them are silenced because when I'm live streaming every morning, the streamers, the people trading with me, don't want to hear all my alarms. They have their own alarms, and it just confuses them. So I have a few that I really need myself to trade, so I don't turn those off. But most of them I can just see by looking at the arrows and determine the action. But back to this. So this is the engine that drives your entry. So you're looking at that, and that's the first thing you're going to want to look at until we get into strategy, which I'm going to tell you a little bit about what we trade here for strategy. But this is the first thing you're going to want to look at. And then you're going to want to make sure nothing's conflicting with it. And then the other thing you're going to want to do, like just say this is going short. You're going to want to see if did it hit a resistance level as it was going up, and that's why it turned around. So you're looking for support and resistance levels too. But as an indicator goes, this is basically the best indicator I believe is out there. If you're a scalper, if you're a short-term scalper, this will work on a 1 and 5 minute chart or a 2 minute chart. Anything below a 5 minute chart, I highly recommend using it on a 1 minute chart. That's what it was designed for, right? Now this is a fairly recent one, and it's sort of like a training wheels indicator, but it's used by professionals, particularly to train people when to get out of a trade. Say you got in on this trade, you would look at this target up here. How far should I ride that trade in this direction? As you can see, this is very thickly traded right now, this time of day. It's not really moving very much. It's just moving a few cents. And how does it determine what that is? Well, it takes the movement of the last 9 candles, in which way they were stronger and how many pennies it went for stronger, right? And then it'll give you the target in pennies, and when you enter the trade, this just darkened out, but this will light up and it tells you how many pennies you've already moved. So right there will tell you like how close are you to 3 cents. Typically when you're trading, you want this to be 10 cents, 12 cents, 20 cents, 40 cents, higher numbers here. Right now, you wouldn't really probably want to trade this stock because it's going very slow. But I brought this stock up to show you the strategy itself, which we'll get into. So, and then it's going to keep an eye at your total P&L. So these two together work so well. And over at the $1 Million Margin Club, I think they have a package where they have the two of them together. I have a link to it if you're only going to get two. But, really, if you were to purchase these, you would probably get your money back in a couple of days. They're not expensive. They're $24.95 over there. It helps support the channel. I am their brand ambassador and the only ones that really sponsor me. And I only really push stuff I believe in, and these I truly believe in. Let's get another look at a little deeper into here. So I open up, this shows all the studies that are on the chart. So these are things you would typically put on a normal Thinkorswim studies chart. You're going to want your EMAs on here, the moving average that's been smoothed. And this has the 9, the 14, and the 20. And then the SMAs, meaning this is how they move on a day chart. They'll be on a 1 minute chart, but it's going to show you where they are if you come across them. They're pretty important. That's the 50 average, the 100 average, and the 200 daily average. And then the other thing you have on this chart is the VWAP, the volume weighted price action. You want that. That's typically considered to be the value of the stock at any given moment. Although when it comes to scalping, that's not that big a deal. You don't really want to pay too much attention to that. And then we have the ATR multiple range. I'll go into that a little bit deeper in a minute. You have the multi-time alignment. I'll talk about that. The risk oscillator we just talked about. The MACD I briefly pointed to you. And how does the MACD work, right? That's an EMA crossover, convergence, divergence, and that's the 9, the 20, and the 6 that it takes to decide whether you should go up or down. I find this to be, I really respect this when it kicks off, and it has an alarm that says, hey, go this way. And that's really important for traders. And then you have the market magnet, which we'll talk about in more depth. And then we have the buy-sell oscillator, which is based on overbought and oversold, RSI, relative strength. And then the whole and half dollar, which basically marks every whole and half dollar, these gray lines, for any chart. Now, you can draw them yourself, but this just makes it really easy, and it's wicked cheap, and they're just ready and set up for you. And you might ask, why would you do that? Because that's where the crowd trades. They trade a lot on whole dollars and half dollars, so knowing those levels is so important. Then we go to the lower bar down here. We have the Scalp Pro meter. So that's what's on this chart right now. Now, let's look at this ATR for just a minute. It's going to get crowded here because I'm going to jump off this chart, and I'm going to open up this day chart down here. Now, this day chart has the ATR levels. What does that mean? Well, what that means briefly is that, and I'm not giving you an entire tutorial here, but I'm going to go over pretty quickly here. You're looking at the average true range down here of what would be the average price this stock would move every day over a 14-day period. Like, what's the average it moves in a day when you smooth out 14 days? So if I go over this candlestick, say right here, it says the average is $3.99. See when I go over? So just call it $4. Now, there's two ways you can mark the ATR. You can mark half of that, high and low, or you could mark the entire $4 up or down from where it last closed. Some people do it from where it opens. I do it from when it closed. That's when most of the people do the previous day, is showing you what was that average smooth completely in. If you're going to the day that you're trading, it's not done yet. So it just confuses the algorithm that's figured out. So this is a really good indicator. You can put it up here to see the prices, right? And then you can draw them and mark them if you want. But it gives you the overall, what you're looking for here. But then this is the one with the labels, and they're just these little red and green lines, right? And then this is one, by the way, that's free over at the $1 Million Margin Club. You should pick that up. That's pretty cool. This shows you what the volume is per 1 minute candle over a 10-day average or a 1-day average. And when you're trading this particular strategy, which is a large cap retracement based on the RV strategy, and that you should look that up. That's Day Trading Volume 1, the RV strategy. I have a link to that book. That's the book that started all this stuff. And if you haven't read it yet, you need to have it on your desk, because that's where pro traders are born. So read that book. But anyway, I have a link to that. But this is one of the ones that I made sure they kept for free for you. So if you go over there, you should get that. But so this is something that is on this 1 minute chart over here. And it's just marked by lines because I didn't want the labels to be up here. So the solid thick line is the half level. That's the half level high. And then as you go down here, there's the half level low. And then the full ATR is that dotted line there. That's the low, and that's the high right there, right? So that's the full ATR. These partial ones that don't come out all the way, those are part of the market magnet. And since you see that right here now, that's this purple line, these little blue, light blue stripes above and below it, and these green and red arrows. And now there are videos over at the $1 Million Margin Club that shows every one of these in detailed action and how they're supposed to work and the mathematical formula that is being used. You don't need to know all that stuff, though. You just need to know how to read it if it's on your chart. Like, what does that arrow mean? Go the other way, Or it's telling you maybe go the other way if you get enough cumulative data that says it's time to get out of the stock. It's telling me that it's done, the move's done. So you use the risk oscillator first, and then you can look at other indicators to help you. And the market magnet is ideal for entering and exiting. This is obviously everything's prior data that just happened. This always needs to be set under my picture, set for today, not one day. Your chart should be set for today. So if you go under your settings here, they have the time frame here, and it's on today. A lot of people put it on 1 day thinking it's the same. It is not the same. So 1 day, make sure I've got the right camera on me here. Yeah. So this is set for 1 day, and it's going to tell you what 50% of the volume has been moving. That's the high of it, and this is the low of it. 50% of since the market opened, that's where it makes its own little channel. And channel trading is so important, right? So we'll get into a recap in just a minute, but of what happened today. But I wanted to go over the basics so you can get an idea of how you might be able to trade along with me every morning. So then this is the center, and it's called the magnet for a reason. This is where the most volume has happened to this date and time right here. So it always tends to gravitate back to that, and that's why it's called the magnet. And then these blue stripes will signal as they shoot across a volume that's just happened. That might signal that it's about to pop up toward the blue stripe that's coming in. So you always want to watch that. I announce it all the time when I'm trading, like, hey, this thing's about to pop. Look at it shoot in. That means it's like a springboard, like the price goes up with it. So you can kind of see. And you tell me if you think something like that would be useful to you. So it's just like, they're just a no-brainer that $24.95, you might want to get this indicator. Obviously nothing works all the time, right? But this is a very accurate one. And then some of the others, I talked about the MACD, which basically is a crossover of your EMAs. So on the gray line, it's a 9 EMA. The purplish pink line is a 14-minute, and this is a 20-minute EMA. And then here's your VWAP down here. A lot of people only take trades long above the VWAP, low above the VWAP. That's a strategy. Doesn't work all the time. I think it's like putting darts, and just throwing darts at a board. But it's good to see where that is to put it with the rest of the data, right? It might be a support level as this comes down. So you look at the other data, right? But, look at how accurate the MACD is. It says it's going to go down. It went down. This is a buy-sell oscillator. The MACD is only the white arrows, okay? So MACD says it's going up or continuing. It's going up. Let's see if we can find a wrong MACD. MACD says it's going up. MACD says it's going down. MACD says it's going down. MACD says it's going up. This one's wrong. Well, it's not really because it went up. Yeah, it's just a red candle, but at MACD. So MACD arrows, that indicator, highly respected. In the moment, it's going to feel different than me just going back and cherry picking an arrow, obviously. So it'll flash in and flash out. So again, you're looking at, is that saying it's going to turn around? So you got to take a beat and look at your data and use a little bit of your cumulative brain power about what you've been learning and watching. Once you kind of get that edge, the MACD is extremely helpful. The buy-sell oscillator is based on whether a stock is overbought or oversold. I found that when I read that, I think about it maybe taking another minute or two to actually activate. I typically do not use that to take a trade going the direction I want to take. I typically use it to get out of a direction. So if I get out a little soon, at least, if I'm green, I'd rather get out a little soon and be safe. So you will see like this arrow might pop up here, and then the price action is so strong, it just pushes it. But it's warning you like, look, it's overbought. Not many people are up. The oxygen's thin up here. So you want to look at that buy-sell oscillator as a message to like, this move could end at any minute. Get ready. And indeed it did. It pushed it up, but it turned it down, and it went down. And then even here, you see it turned it down. It went down. And then, now if you get both of these saying MACD and the buy-sell oscillator, but see here too, it's like it turned around, and at first you see it and it's like, hey, it's not really turning around, but then look what happened. So my advice on that indicator is wait 30 seconds, wait a minute, maybe even 2 minutes if you're getting in a trade with it. But if you're getting out with a trade, just take your profit right then. Don't get greedy. But again, another magnificent indicator that really helps. Now let's talk about these vertical lines you see that look so busy coming up here, 5 minute, 15 minute, 5. Okay, so this is the multi-time alignment. These are set at 5 minute increments. It's important to look at this on two different charts. This normally has labels up here. I took them off because it gets too busy. So what did I do with those labels? I put them over here. And what do these labels do? A lot of people don't trade on a 1 minute chart. Right? They trade on a 5 minute chart or a 15 minute, 30 minute, 1 hour, 4 hour. In fact, data shows that more people trade on longer time increments. What are they looking for before they get in and out of the trade? They're going to look at the candlestick price action where it has abruptly stopped or turned around, or where it's continuing. It's continuing the way they want to go. So if they want to go short on a 1 hour, meaning bet that the stock's going to go down, they're going to most likely go in down. Right? They're going to go in down. So knowing what's about to be added, what's about to affect the price on the level 2, everything you see on the candlestick, what might make that price go a direction, other people trading at different time increments might, pretty good idea that they're going to make the stock go that way. They have a strong bias that it's going to go. See how it's going down with these? It's a strong bias that that's going to happen. Now, it's sort of a reset. Like every 5 minutes, you want to recalc. Like how strong is how many? There's 3 5-minute traders here on the 15 plus the 15-minute. Then you go over here and you got 4 1 hours and 6 30-minute people and so on. that's a big one. That's probably going to go up if it got to here and it was still green. This will change color depending on if it is still green. So it's telling you right here the color. But if you're used to looking at it over here, this is a quick read. But this also tells you what color they are. This is just going to tell you really quick. So I split it up. When you get the indicator, they give you all the versions, and you can bring them into different charts. Again, every 5 minutes, which is how this all started when I traded, I said, hey, look at the 5 minute on your grid. No special indicator, just your grid on your chart. When it gets to 5 minute, if the 5 minute is showing it green going up, probably people are going to keep going up with it. Showing red, probably they're going to go down. So get out if you're trading long. So that's how it all started. And then you realize that the longer time frames became just as helpful. So that's an incredible indicator. As we're over here, I'll just briefly talk about a couple of. This is the ADX, which is going to tell you whether there's a trend up or down. This is the market pulse that tells you what the whole market's doing. Well, the main indicators like the QQQ, the SPY, the TLT, and the UVXY, the fear indicator, bonds, and then the SPY and the QQQ. So those are both ETFs that people will watch. And that's telling you, hey, look, the market's going down right now. Now you combine that with that. Then you look at your price action. And then you look at a catalyst to see, hey, has there been recent news that's saying this should be going up or down the stock that I'm trading? What's going on? And I have a 15-minute chart here, too, to let me see a little bit bigger action so I don't get caught up in the moment. So you may find this to be very busy. It's something you get used to. You don't have to have all these things open. This is where I take the trades, the active trader, where you can set your share size really quick, or you can just bump a share size here, and then you can change. I have videos that tell you how to set this all up. I have videos that give you free layouts, and then I have videos that give you scanners. I mean, the scanners right now, you would get them at the $1 Million Margin Club, but this is where you're going to find your stocks under scanners, right? Now, these are all specially coded scanners, all right, that you can get for $4.99 that I put in. This one has 5 codes in it. Right? This one is ATR equals 10 or greater 4. Yeah, this is the one for the RV strategy right here. So let's look at a couple of others here. So these are some of the ones that I do, the professor. So this is a momentum scanner. This is a gap scanner. That's over there. This is the one that's used on a popular trading platform that only trades momentum. I won't mention his name again, but it's an exact duplicate. He charges money for it, and a lot more than $4.99. You can get that here. The one thing it would be missing, it doesn't have an alarm and have him saying, hey, I'm going to go over and trade this right now. You'd have to, see it and see that they're kicking off. These are a couple of the others. This is the one I just did, the mid cap one. And then this one that I use on this strategy we trade, and this teaching I think is the one that is, this is the one right here, and this has all the custom coding in it. I scan here. It's only set for 10 stocks, and it's going to pick out larger mega cap stocks that are moving over 100,000 volume every 1 minute, and a lot more, as you can see, and that's going to give us the price movement we need to trade this particular strategy. It comes in handy for just about any strategy, though, I will tell you. And if you don't want to just trade the large caps, I did one for just 50,000 above too that isn't set for a large cap, market cap. That 25 million actually means 25 billion minimum market cap. So watch some of the videos. I go into depth about these. There's all these different really wicked cheap scanners that I've created over at the $1 Million Margin Club, and there's a link for that stuff. So that's pretty much the indicators that I use. Now let's talk about the strategy that we trade every morning, which is so important. Actually, I'll start it with a 5 minute. So every morning I'll start, and after I scan, I'll pick the stocks that I'm going to mark up. And how do I mark them up? Well, I mark them up by historical data. So what we're doing here is just common sense. So many YouTube videos you see will just pull up a picture and say, when it gets down here, you should trade. That's a dip, and go in and go. I mean, that's very cherry picking. You should be able to mark your chart out before the day begins and have your levels all set. If you want to add to those levels, which I recommend, and I'll show you how as the day goes on, then you can do that. And there's ways to do that based on historical data. But when you start off in the morning, like this high wasn't here in the morning. So the first thing I do is I set a Fibonacci level. So the Fibonacci level, maybe was that pre-market? Yeah, I think we had a pre-market high like right here, or maybe right here, and I set the Fibonacci level high. It just isn't drawn over there. So basically, it's up here, and you can bring it on your chart. You always go left to right. You like open it up, you click, like if you open the Fib right here, you would click it, right? And then it drags to where the high is, and then you'd mark the high, right where the high is. Let's remove that drawing so we don't get confused. And what that does is it creates channels based on the oldest historical data that there has been, the 12th century or whatever it is. And this is still used. It's like nature's mathematical formula. Trust me when I tell you, you should respect, for the most part, these levels. It's all probability and outcome. But if you look at something like this that wasn't marked on this level, look at how it stayed in this channel. Look at how it stayed here and pop. Look at how it hit it, respected it, came back, hit it, came down. See what I mean? Fibonacci levels, just common sense. Mark them out. They're not hard to mark out. You just always go from the low to the high or the high to the low, always left to right, and mark it. I do a 5-minute, 10-day chart. That is the most commonly used for day trading Fibonacci levels, not swing trading. They'll go to like a day chart, right? Day trading, you need the levels to be somewhere you're going to trade. Now, remember, this is marked a ways ago. Look at how that's in that channel. What you're trying to do is you're trying to create channels, and then you're trying to go off the floor up or the ceiling down, or if you're just going long, you go off the floor up. That's what the large cap retracement is and mega cap retracement. You're finding a channel and then you're trading in that channel. And that all started with Day Trading Volume 1. It's called the RV Strategy, and I highly recommend you reading that book. So right here, I didn't end up trading NVIDIA much today, but I did mark some historical data, and this is an historical data level. And what you do is you just open up a price level, and you find a spot where the price action is stopped and turned around, and you double-click, boom, boom, and you've made historical data. And look how it respected it again, and look how it respected it again, right? Now, there was no point if the price action wasn't going to go down this far, and I felt today that price action was only going to go up, and so far I've been correct. Hasn't gone a huge amount up, but it is going up. I think it will close higher than it's open because of the news that the the tariff deal at 15%. So I think the overall market is going to go up today, and NVIDIA is a stock that travels. So these are the travels with the market, or maybe even moves the market. But these are the conversations I have every morning before I start trading. I go over my thought process. Charlie, who works here, she helps with the chat, and she puts together news stories that will affect all the large and mega caps that we might be channel trading with the RV strategies. So I touch on those stories, and then I talk about my logic where I'm marking historical data. So historical data can be 1 minute back, it can be 5 years back, right? If you're trading intraday, day trading, you pretty much don't want to go more than maybe 10 days back. You've already got your SMA dailies on the charts, right? On my 1 minute chart, I have the SMA daily. So that's daily moving average of 50, 100, and 200. So I've kind of got those levels. If they come into play, there's going to be marked. But there's no sense in marking historical data back 6 months if the price action's so far away from it. You'll never see it in the brief amount of time that you're trading, right? So you're looking for something that's in your channel, right? So this is in the stratosphere. The oxygen's thin up here, I like to call it. There's nothing up here. It's not way, way long ago, right? So there's nothing to mark historically. So we're only going to mark below the opening area, right? And then you're thinking, well, if it's long bias, why do I want to waste the time marking stuff down here? Pretty much the Fibonacci levels picked these up anyway, so there was no point. I mean, maybe this one. The black areas are the open sessions. I mean, maybe this one would have been, but look, it picked it up. Yeah, that's just a continuation. So it respected it and respected it and respected it. That is a great historical data level. So you're looking to mark a level that may hit again while you're trading. It's just that simple. You're looking to mark that level. It may not work. As the book says, as many books say, you just respect them until you don't. The second it breaks that continually, just like breaks it, trends right by it, like that level meant nothing. Take it off your screen. It means nothing. It's not a guarantee, right? But a lot of times, I don't want to say most times, a lot of times it is respected. And that extra edge, guys, with the indicators and the skill you develop to see the movement on the level 2, that's the edge you're looking for that's going to get you green every single day for the most part. So historical data marked out. Let's take a look at another one. I'm about to break into how we did today. You can see on this stock was $104. I'll go over those trades. And then if we get to say, I came back, guys, for those of you that watch, and I traded with Charlie. So let's go to AMD. I think AMD, we did $49. So let's look at how stored. Now, today was a little more difficult to trade because it was trending up. So I marked a level and it just blew right out. There's nothing to mark up here. So when you see these levels here now, these were intraday as I was trading. I was trying to find anything not as highly respected. I wasn't going to respect these much, but I put them there for a little bit of guidance while we were trading in the moment. And then the other things you're looking for here, like the candlestick pattern playbook, is the only book still, and I have a link to it, is the best pattern book there is. No matter what you see, it is the best pattern book. Not only does it have depictions of every pattern, drawings of every pattern, it has a rating system. It's the only book that rates the accuracy. It would have told you that this is a tweezer move. And this, I believe it's an 80%, maybe a 72%. Bull flag's an 82%. But this tells you that this is a very accurate pattern when it comes up and it tweezes like that. And it says that when it tweezes like that, you typically want to expect the movement of the inside of the tweezer to go down. So if you take a look at that, 174, like 40, all the way down to 173.66. So a little less than $1 from the time this closed. So this closed the end of the tweezer. Now you should expect this to go down a little bit less than $1, 73.39 down to 72.32. So there it is. It did its exact move before it turned around. And it's doing it again here, right? There's another tweezer move, right? So it told you again, look at this candle, look where it closed. It actually went further. That's just one pattern. That's an inverted hammer. That's a reversal sign. This is a rickshaw man or a doji that's also telling you at the end of that move, it's going to go the other way. So you don't want just support and resistance lines. You don't want just indicators. You want to learn your patterns too. This is the edge, guys. Why the 5% make money, make millions. There are many traders making 20 million a year. That's not just a number I'm throwing out there. That's verified numbers from other trading prop firms. So, but don't expect to make $20 million. But I'm saying, how do they do it? Well, they're reading price action, level 2, which I haven't talked about yet. They're reading historical data. They're reading candlestick patterns. All these things. Now, a lot of them, they'll trade off channels and some of them don't. Just everybody has their own little shtick that they do. Here's another tweezer move telling you it's going to go up, and it did. Here's a doji or rickshaw man saying, hey, it's going to go back down. It's just like clockwork. You can literally, more times than not, I'll give it that. I won't say always, but I'll say more times than not, you can respect the patterns once you learn them. There's another book that came out after the Candlestick Pattern Playbook, and it's called Day Trading Volume 3, and it's the 66 Candles Mastery or something. It shows an old Japanese guy on the cover. And that one is just puzzles and games that help you learn these patterns. So I don't mention this enough, so I wanted to make sure I brought it up, that the patterns are so important. But when we marked out AMD this morning, it wasn't up here. So I did the same thing. I marked the Fibonacci levels, left to right, high to low, made some channels. I didn't really have much. You can see I marked this level because it hit here, then it hit here, then it hit here, and I thought, hey, at the open, if it just happens to go down, we might want to buy off that dip, right? But it didn't. It just took off. So that one we made money on, but it didn't really give us what we wanted in the channel. They were just taking off. So let's go to Tesla. Now this one I came back in, guys, that were watching. I traded this with Charlie so she could get to her goal. Now this is not one I normally recommend trading, but it actually had a catalyst. So you don't want to trade, if you're trading a large cap retracement, you don't really want to trade on news or a catalyst or earnings or something that might make it go a certain direction. It's great to travel in a certain direction if you know the stock's going to go that way. If you know the stock's going to go that way, then go with it, right? But how do you really know, right? You're always chasing it. If you get green in the beginning, then you can hold it and just say, look, if it goes back, if it retraces this bar, I'm keeping my profit. If it starts to go back, I'm going to get out here. I'm good, right? There's a good book out there by Tom Hogarth called Best Loser Win that talks about, and I have a link to that, it talks about how you just let the winners run, man, until you see data that says stop running with them. And when you use my links, by the way, it really helps me out, so I appreciate it. If you're going to get it anyway, please use my links. But these are books that I truly believe in. Trading in the Zone, Mark Douglas is going to help you deal with the probability and outcome. And he says, there's a whole chapter in there I love where he says, count on 20 trades going against you. If you can live with that, with your share size, you're going to probably make it. He doesn't say those exact words, but he bases the probability and outcome like, it could go that bad for you. You could think you have it all, and in 20 trades go bad for you. Are you still alive? Is your account over? So you got to make sure your share size. I did a great video called Trading with Nerves of Steel. You might want to look that one up. And it talks about share size is what it's all about, man. If you're sweating, if you're shaking, lower your share size down to 1 share until you just don't care and you're just getting the hang of stuff. Then just judge your accuracy. Don't look for money. Trade with 1 share, 5 shares. Just judge your accuracy. When your accuracy gets 60, 70 and up percent, mine's 92% right now. I'm running, I'll show you in just a minute. As it gets better, there's less and less chance you're going to lose money as long as you stick to your max loss. I'm not going to do a whole tutorial, but I'm going deeper than I thought. But here is the fibs on Tesla. They also, they did do some help here. Look at that. Look at that. I didn't even see this happen after I stopped trading. So that was marked high to low in this case, left to right. Bam, like a hard ceiling. It turned around. How would you know that without marking that level? How would you know, like, I should take my profit now? This is all over, right? Now, you could mark some of this historical data if it kept going. Tesla's not the best case study. Look at how that historical data was respected. Look at that. That's marked from prior. I'm just trying to point out there's a lot of people, I always fight back on people that say, oh, historical data is senseless. You don't know what you're doing. Well, they pretty much told me they don't know what they're doing. It's like somebody not using the average true range. You're going to mark that. That's historical data. That's a range of a stock. You're going to want to know how high it typically goes and how low it typically goes. That's historical data. Those are support and resistance levels. It's the same thing here. It's just that you're getting inside like a microscope and you're seeing like, those are the spots, man. So let's look. And if they don't respect it, then get rid of them. And that's what the whole RV strategy is basically based on. It's not the exact strategy I trade every morning, but I use it as a guideline to trade in the morning. So let's see what else I traded today. Did we do? I can't remember if I traded Apple. Okay, 1 trade on Apple. Again, I think the reason why is because it started to go in a direction. Like I was looking over here at the beginning of the market and it was just going straight up. So I got out. I guess it did a dip and went up. And I was like, I can't, this is an older data. This is when I was trading it. I think I marked that. And look, you can't respect that level. That was marked on a 1 minute. And that's just useless right now. But at the time, I was looking for something that was moving here, and it was like, it's just going up. I could just ride it long and hope that's what it's going to keep doing, but I don't know when that's going to happen. I guess this historical data told you when it was going to happen, though, didn't it? And look at it here. Again, I have the same argument with nobody. Nobody can argue back with me. It's just because of the comments I get. It's just like, dudes, come on, man. The evidence is so clear every single day. But so that's the strategy. You're looking for channels, right? This is a big channel. Try to get your channels tight down to maybe 25 cents up and down, and then see if you can get into the channels as they move across. See if it works. Now, this is a 5-minute chart. You would be trading those channels on a 1-minute chart, right? So the half and whole dollars are way down here. That's what those are. They're set for a different stock because as Tesla changed, I had to Actually, I think I changed them back to NVIDIA. But this is what you would see, right? So if you're zooming in on a 1 minute, like if I was going to continue to trade this, right? I don't have historical data here, so I would put something where this tweezer move was. Look at how often it got respected after that, like turn around, turn around, turn around. That's a good spot to look for a dip to take a long trade here. And then let's look over here, because I'm looking at this going, hey, we're right at the top to go down. It respected it. How many times did that happen back here? Kind of the same area, like right here. So that area is a channel. Right? So you got 214.23 to 214.43. That's a 20-cent channel. Not a lot of risk, right? And then when you're trading this strategy, I always say go in only 25% of your position. And then let's just say this is a different level. I mean, this is like a flat top breakout here. Look how many times it hit and then it broke out. So that level might get respected up here. And this could be if you're going short and it was going against you, right? This might be where you add in half, or you say the rest of your position had to half, or you just say, look, if it broke that level too, it's time to get out. So you have backup levels that help you decide, but look at how that respected that, and it's just coming down. So you could have taken that move already, say you got in here, 214.42, and it went all the way down to 214.34. So if you had 200 shares, you had a quick $20 trade right here, and most likely your indicators were calling it out as well. You can see here, the Scout Pro said, you're going down. Now we're on the next candle going up. So, you just use all of the things. Your target's only 3 or 4 cents, so this market's moving so slow. But let me break in a little deeper and show you how we did today. I'll show you when I took these actual trades, and that should help you determine, although we weren't channel trading too much today, but I hope this was somewhat informative. All these things have links on my channels, guys. So let's go into what happened today. Okay, guys, so this is a still picture of me just about to open at the market here, and I'm opening on NVIDIA, and I'm going to turn off the sound on this, and I'm just going to talk over live now. So the picture you're seeing is me live. Under me is the picture of when I actually traded. Ta-da, doppelganger. I actually do this a lot. Sometimes I cannot tell a lie. I will come in later and call trades I didn't even do for somebody else, but because the point is a teaching tool, right? It's a teaching tool. So, and I don't do many like that, but sometimes they're action that somebody else actually traded. I cannot tell a lie. It happens from time to time. But anyway, so let me just start this right here, and we're going to see what we just did this morning. So I'll press play here. I've got the sound off, and I'll talk to you about my logic was I believe the market's going to go up, right? So it's just about to open. I'm looking for a dip and then to ride it up, and I may take a swing trade, or I may just get out. I'm on the fly. So it's starting to go down, but it didn't go down much. And I remember thinking, it's not going to go down. I should just get in. So I got in. You saw me get in real quick at 174.36 is my price. You can see this is what the market maker is going to give me, and it starts to go up, and I'm looking to take a profit. I didn't at first, and I thought, oh, I should have taken it, because then it went red again as it went back down. It's below my position, but the first candle, it's really hard to call any price action because there's preset market orders, and they're just washing out, we call it. They're just washing out. So now, because of the way it's moving, I'm going to sell the ask, and I clicked it right there, and it picked up immediately. And what does that mean when I sell the ask? That means that over here, I was being picked up on the highest price I could get when I sold the ask, and it picked me up for $60, right? Now, I take another immediate trade here, and I almost get into trouble. But remember, I'm long biased here. I'm thinking this is going to keep going up, right? So I'm thinking, do I wait for a dip, or do I get just keep going up? And that's what I'm struggling with right now. I'm certainly going to wait for the next candle. This is still the first 1 minute candle. I don't usually like to just get right back in on the same candle. But let's see what happens here. I can't actually remember. I'm talking to everybody saying what I'm thinking right now, like, is this thing even going to go up? Just ever come back down, or is it just going to go straight up? And there's the next candle. So now I'm watching closely, because it's kind of just slowing down to nothing, which I didn't expect. I expected price way down or way up. And the fact that it slowed down like that, concerned me. So I'm speeding in. Is it my screen I'm thinking? But then it goes up and it hits that ATR. And I'm like, if it breaks that ATR, I should just get in this. It's just going to go. And it may never come back. So I've got a little FOMO hitting me here, thinking I'm going to miss the trade. Get in. So I got in market just to make sure I got in, and then it started to fall off immediately from my position. I mean, not all the way, but I want bigger money here. So even if it went up, I would probably be waiting a little bit for maybe a little bit, another $50 trade. But look what happened here. It got rid of all my profits and went down. So I think at the time I'm telling everybody I'm totally prepared for this. I'm only a quarter of my position in 200 shares, and I'm looking to add. I'd like it to get down to 174 even, near the way it opened in the market, so I can go up to a full 400 shares. But I'm not going to rush that. I'd like to see it get down, show signs of it to turn around before I go into my full half position, not full position, full half position, which I rarely go beyond until I see good signs that it's worth the money to do it. Of course, I can be wrong. We'll take a look at the accuracy and the trades I took, the breakdown, when I get done with this recap real quick. So I'm not going to show the full length of every trade, obviously. But I mean, most trades are much quicker than what you're seeing here. So this video won't be that long. But, I'm hoping it's going to just shoot through here with power. But as the minutes tick by here, I'm talking about letting this stay and going to another stock, because I'm not concerned it's going to go down much, like down to like 165 or something, and I'm down suddenly down a couple thousand. No, I think it could go down maybe 200 or 300, but I think it's going to swing up for the day. So I'm just not concerned to let it run, which is one of the things I mentioned before I even took the trade. This could become a swing trade very quickly, meaning throughout the day or several days. Swinging it is not just a 10-second trade or a 1-minute trade. It's meaning let's wait for it to make its move, for it to realize what it wants to do, right? So I think about, hey, I get ready to get out here because it's about to pop. But it toys with me. So I think what happens here, actually, guys, is I think that I don't get out here. So let me fast forward here and see. So here I am a few minutes later, stuck in the same situation. At one point, this was down $157 red. I think that's the highest it got. I was not concerned. And there was a little of me going like, is this thing going to fade today and all this good news? There was a part of me was a little slightly concerned, but not the money-wise, no. And I think eventually it would come back. I'm not worried now about the August 1st announcement like I was before, so I'm not as worried holding a swing into these stocks. I don't think there's going to be the crash like there was another time. So I'm about to switch. I've been prepping the traders this morning, like, look, I'm just going to ride this as a swing. I'll keep an eye on it as we switch. So I go over to AMD here in just a split second while I'm waiting for this to play out. And then we talk about AMD for a minute. So I'm over to AMD, and this is technically not the strategy. This is going straight up. This is not consolidating, right? This is not channel trading. These are the whole $1.5 levels. That's historical data there. Right above here, I had my eyes on a fib, and I'm thinking, I can chase this. And the fib is where I need to watch out. So I just put my share size. I think I maybe go back up to 200. Let's see. No, 100. So I lowered it to 100 because I'm worried about I even went to 50. I'm worried about channel trading on Tesla here. So I did look at AMD earlier. I thought I was on AMD still. I looked at AMD earlier, and I ended up not trading it, I think. Maybe I skipped too far ahead. I'll go back in a minute just to make sure. But so I go into Tesla, low share size, worried about anybody following me, making all kinds of warnings that, be careful here. I really don't know how to read Tesla. I know how to read it. It says it's going up. But you can't trust Tesla. Let me zoom up. So I'm back to take another trade on Tesla. And I tell you, I still have some apprehension, which I'm saying it does seem like it has news. Tesla has news down here, okay? So I'm thinking when Tesla has news, even when it's not good news, people just go crazy. So you can see over here on the 5-minute. So you are chasing something here, which could become a falling star at any second. And it could drop $10 in like 3 or 5 minutes. So that's a lot. That's $1,000. So, you need to be prepared to get out for a max loss. This is not one I would swing. And right now, it's not one I would short. Typically, I am short bias on this stock, but not when it has news right now. So let's see what happens. I'm buying the bid to get the best bid price because the spread keeps getting wider here. And I'm looking for level 2 to swale here. I'm watching, particularly on this, you can see as the price is going up or down, up, as you see these swaling. Are there higher highs or lower lows? Which way is it swaling? When it goes up, does it have more pennies going up than down? Clearly the target says yes. This indicator really helps with that. So going long is the right direction here. But you can see what happened on this trade. So you have to be with 100 shares. You just have to go like, no big deal. This could do you $300. I shouldn't be concerned. That's the way you have to look at this when you trade Tesla. Like, you have to have very low share size or very thick skin for losses. So again, there's no reason for me to think that this should reverse. If it's a normal stock, it should keep going up the way it's going up. But every time it does this, with a gravestone or a doji or a dragonfly, every time it shows a sign of not being as strong, you've got to watch out. So there's a dragonfly that's red. This is a sign of a reversal. You broke back through the even dollar amount there. Are you gonna break through this historical data too? I think I checked this data right here because I'm worried. How strong is that data? Is it that it's about to break through? Maybe I already did check it. So no, it looks like I'm about to check it. No, maybe not. Let's see. I can't remember every trade, guys. So let's talk it through here and see what happens. I'm trying to tell you my thought process. So I'm getting ready to get out. It's moving with speed, so it could give me a double-digit number to get out very quickly here. So I'm just looking to get out quick on the ask. Every time that it consolidates, I get more worried that it's going to drop off. Instead of being a breakout, it's going to be a breakdown, as you can see. Taking away the profit from my other NVIDIA, and it's looking to hurt me. So a little risky here with Tesla. I have the 9 moving average to hold it up. I'm talking about that. The even dollar right here. I think if it just blew right through these down all the way down to this level, I was talking about, I wasn't quite sure what that level was right there. But if it moved, because I looked, it's not an SMA. But anyway, so as it goes down, I'm trying to figure out where should I be worried that it's not going to recover. Right, so I am starting to have those thoughts, but it doesn't really gain purchase with me because it doesn't. So I'm looking at that level right now, that 321.70. Like, where was that marked? Okay, so it's marked right there, and it does hit it a whole bunch of times as it goes across. It gets respected right there too. See, so I'm showing that got respected right there. So that makes me start to like this level. There it is again. So you don't want that to break that level going down because it doesn't have anything else to that fib. So had it kept going down off that level, I would have been more concerned. So we're waiting out the trade, starting to go back up. I'm feeling better now, like that was my entire plan, no problem. I knew this would happen exactly this way. Not. So nobody ever knows for real, right? But the more cumulative data that you get, the more you're hedging. So you can get a good trade, right? You're going to get more good trades than bad trades. You're going to make money. But you got to put in the work, the time, get the right tools. And then it becomes very, very easy. That's a stupid statement. It becomes easier for you is what I should say. Easier for you. The more you learn. And I still have losses that I can't believe I had because I don't listen to myself and just say get out because I'm so convinced it's going to reverse. I just convinced myself. In some ways, being so accurate can really work against you for big losses because you just always feel they're going to recover. I have kind of an advantage. I kind of cheat because I can keep adding to my share size a lot. So I get my price closer and closer to where the actual price is by adding shares. My price point keeps getting closer to it by adding shares. I have a large enough account where I can do that. I can margin, well into the millions of dollars. So I can do crazy stuff, have, 3,000 shares of Tesla and just try to get the price down there and then have a little bump up and get out, right? So you can see where the synthetic icebergs are. So I know I'm going to get picked up. Little advantages like that for people that trade in mega. So if 99 times out of 100, I would never implement that type of strategy. But if I called it wrong and I dig a hole deeper and deeper and deeper to where it's like, oh my God, I'm going to lose 10K on this trade. I cannot let that happen. You're crazy. You get hijacked, right? So then I'll add to my position like bam, 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 triple. I might hit this 3, 4, 5 times until I see this price get right near this price, and then I look for, you see which way it's swelling. Then as it swells up, then you get out. You use market because if they're going to give you an alternate trading route, which they will do for me, large traders that trade large share size, they're going to guarantee I get filled without, with very little slippage. So I get out, and it's cheating almost, right? By having the more money, it's cheating. But I will cheat to win. I'll say it. And that's why I say to you guys, max loss, no matter what else. Get out at your max loss. Don't play the reindeer games I play, I often I get so angry because I want to go short, but I'll push buy. I'm just like, what was I thinking? And I start my trade out wrong. And then I just double down rather than just get out immediately. I can make this trade work for me. I knew the right direction, but I stupidly pushed the wrong button because I trade with hotkeys a lot. And, when you switch back and forth, it can get a little confusing. And I was just like, I'll make it work, and it's just stupid. You can't, just get out for a $50, $100, whatever it is, just get out right then, So I always say, do your own due diligence. Don't follow me, speak to a licensed financial advisor. You can look at me as one more trading tool and then make your strategy and your goals around one more guy, one more concept. You don't want to just stop with me. You want to learn from everything you can learn out there. Now Tesla's showing a sign of recovery. We've waited through the whole long trade as I've talked, but I had a lesson to teach upon you. So I think this is about to be a done trade, so we'll keep it rolling for now. MACD said it was going down. This buy-sell oscillator says it's going down. Remember, I always wait a couple of minutes. So after all that, all that horrible pain, I got off for $25. This is where I say, don't get greedy. Just take the money. Now I went back to check on NVIDIA, which I had kept, and I'm just like, you know what? I'm just going to take my money here. I'm just going to take it now. So now that became 104. Now I didn't even look here because I saw it going down in price. So I just didn't want to lose. Now I look, I'm glad I got out because it hit the ATR and started to turn around. So, you look at the sellers here, look at the multi-chart alignment. I'm taking it all and going, hey, that was a good time to get out. Take your profit. It might break the ATR, and then you can get back in again, right? So now I'm checking other stocks. So let's see where I end up. So I headed back to AMD. I saw this consolidation after we left, and I was getting excited that it might be coming back down toward this channel. I'm not sure. Or this could be a new channel. It looks like I'm about to buy, which is surprising, but probably because I'm thinking this is going to hit down here and I'm getting ready to buy. Let's see what happens. Now I'm also looking at the level 2, and I can see right now that's not a bad place to buy. So it looked like it was going to keep going to me right there. Like I said, you're looking higher highs, lower lows. You're looking at this swale, I call it. But, I would have been better off to wait to get in where the support and resistance levels are calling me to get in. So I'm totally ready to add to half share size right down here off this flat top that it broke out. So we call it a flat bottom. But it's banging off the 9 moving average and turning around. So it doesn't look like it's going to give me an advantage of adding to my share size, which would make me more money as it came back up, right? So I am saying to myself, well, I worked so hard for that measly amount of money, and I'm already down over here on this stupid little stock. That's not a little stock, but look at the just straight up over here. So nothing telling you this is going to stop. Look at the multi-chart alignment, right? It's trending, right? So your small microcosm of 1 minute reds, you see how the volume dropped with the sellers? It's above the VWAP, the 14. This says it's going up. I have no worries here that this isn't going to recover, or very little, worries. I totally believe with the data that's on the screen, the target high is larger, almost double the target down. I mean, there's nothing that says this trade shouldn't be successful. For a while I was green there. I saw $13 hit here. It's the P&L. That's how many pennies that I've moved on this share size. So no fear here. Just a waiting game. You got to wait it out, and there it goes. So, yeah, when it got 18 toward $20, I'm looking for anything with a 2 in front of it, I think I said. Like, we're looking for $20 plus, not get over greedy, just a $20 plus trade if we can get it. The longer it takes to get there, the more worried I am about just maybe I should take any profit, I'm waiting it out, resting on that even dollar, 174. Keeps breaking back through it, slightly concerning. It's got a tweezer move right before it, 2 tweezer moves. So it's just a... Oh, we had a little glitch there. So now we have... Now it's making money again as it goes up here. There you go. So that was enough. That was a decent trade there. Let's see what I do next. So I'm about to go back in AMD here based on that support down here. So now we're out of that channel I was talking about, but it seemed like this was making a channel here. So there's a new channel. So I'm channel trading on support and resistance, and I have a fail-safe down here if I need to add to 400 shares. Now you see the magnet working here. As that pulls above the magnet, that could pull it up. I think it already might have done that. I'm not sure. I wasn't watching. And that signifies that the price could go up. So although I got worried right here, the magnet action tells me. So it broke the 9, the 14, and the 20. It's like, hey, dude, why are you going long right here? You're up. Every trade is worrisome, As I see the volume increase and it's passing the last candle, that's what that blue means. That's not a good sign for me to stay short. So I have to decide now, am I going to add to my position for the recovery? I start to look everywhere. Well, that's a big red candle. Is this going to retrace all the way to the open? It could, except I know that the market's really strong overall. Look down here. I know it's still trending up overall. I know that we're looking at a 1 minute chart and starting to get panicked. Now look what happens in a split second. Like we're right on the verge of everybody getting in to go long. So I tried to get out. You see me right there? 173.86. I see it swaling up, so I hold it. So that ended up being like an $18 trade. It was a decent trade. Let's see what I do next. So it looks like I'm about to get into Apple. It's hitting a flat top here. So I'm trying to decide, do I play it long, or is it going to be a breakdown? Do I watch it break that flat top and get in long because it's so strong up? Or again, 2 reversal signs at a $0.50 level. Is that enough to stop it? I'm starting to look at everything going, no, it looks like it's going to break up, not down. Maybe I'll catch a dip on a break up. So I'm looking for a dip, I think, to ride a break up. So I got it 3 cents below the $0.50, just like right here, right? Thinking that it's gonna toy with me, but everything says we're going up over here, going up right here. Target's higher, going up. Everything says up except right here, real tight. So it has to break that, and it'll often bump an area, $0.50, whole dollar, 2, 3, 5, 10 times before it breaks. And then you watch for the volume to increase, to watch the breakout happen as it starts to go up. If you see this volume go higher than the last candle, it's a sure sign it's going to go up. So MACD sending it down, not something I want to see because that's fairly accurate. So we want this candle to close now. So we can go on to the next candle with it going the right direction. Still, overall, everything points to up. You got to just be patient. Don't panic. Wait for the move. I put another channel there just in case on a tweezer. I'm preparing just in case. Just like Mark Douglas says, Trading in the Zone, I have a link to it. You cannot ever trust all the information you have can go against you. You have to be prepared for it to go against you at any moment and have a maximum loss per trade and a maximum loss per day. But you will see that if you get good at reading the indicators and marking out the data, you're going to succeed in a trade as far as the trade going your direction more often than not. The other battle is to succeed in the share size and getting out when you hit your max loss and not making one lose trade equal 10 winning trades, which is what everybody's guilty of, myself included. When you can control that and not get greedy, then you don't have to get greedy on the winning trades. Just get out 10 cents, 15 cents. Don't get even 5 cents. If it moves that much, I don't mean 5 cents, that's what you make. Like if the price of the stock moved 5 cents and you have 500 shares, you have $25, just a quick pop, 5 cents, bam, So now I'm feeling good about this. It's coming back. Will it break the level or should I just get out at the 50 cents? So I'm trying to decide that. And I'd rather wait for it to break the level. And I'm holding it a little longer for that to happen because I don't want to just make $3. But I'm also concerned that it's going to tap and break right back down. So I went out. I got $14. So not ideal. I'd rather have had 20, but it wasn't too bad. So I'm about to kind of recap, and I know I missed a stock here when I did that. Well, let's see. So we have $14 on Apple, $104 on NVIDIA. So I'm adding those up. And then $49 on AMD. And then I don't know if I go to Tesla. I think I don't go to Tesla. And I didn't show that I had like almost $200. Instead, I think I showed that I only had $150. But I will show you on the actual money being made and the accuracy of the trades. So let's go ahead and switch over to that. So I'm just about to bring in where I keep track of everything on TraderView so we can go over this month and how we're doing. I just wanted to point out, this is where we started today. We were right there at the ATR. Remember when I took that first trade and got out at the ATR? So we're right back where I was getting out, right? And then it came back and tested it again. This is what large caps do. They retrace. So if you can just hold your breath and not panic, most of the time they will come back to your position. Now, figuring out which way the market goes biased based on the different indicators and news and things like that is helpful. That I thought this might go to 176, maybe even 178 before the close of day. That's still entirely possible. So a lot of people are very late to jump on the bandwagon and or late to take their profit, and then new traders come in. But let's go ahead and get over to see how we are doing here. So this is a count just for day trading for success. I'm using just this specific count on this month. Our goal is $100 average per day. So right now we have 3, 8, 13, 18, 19 trading days. So really anything over $1,900 is successful. Okay. Now this day I was off, but then I came back and I traded after you guys. So you didn't get to see me make that small amount with Charlie, but that was on Friday. And then I came back today and made another $130 or $40 with Charlie after I did the RV strategy. She was not over her goal, so we did a little bit more to do that. So you guys, I know a lot of you just keep trading throughout the day and have incredible numbers. The email that I'm getting, even into the thousands of dollars. But remember, our goal is just $100. So when you add that to the end of the month, and when you get to we might make $4K, right, for the month. So that's a really nice house and car payment. Or maybe it's not enough to have you quit your job, or maybe it is. That's bring home like $800 a week, after taxes, depending on your tax what kind of taxes you have. But I mean, you know, I don't know. I'm not even going to get down there. But yeah, it's a hedge to make the beginning of making a really good living if you're doing this well. And remember your max loss, just always keeping track of that, guys. So I hope this was informative. Don't forget to check out all the links under the show, more information. Thanks for watching. Don't forget to set your alerts so you can trade with me every morning. You know, I can't wait to see you there. So always stay inquisitive, guys. Be careful out there and go green. Hey everybody, this is the professor with Day Trading for Success. So today we have an exciting video. We're going to go over what happened with our live stream today. Don't forget to catch the live streams under the live on this channel. And then we're going to go over how we did for the month, because it's the end of the month, with the style of strategy that I traded throughout the month, some with the staff here, and a lot of you guys trading along live on YouTube. So we're going to go over those totals. I'm going to go over where I'm going to be trading some next month, and which will be a different channel, and styles of trading that might change. So you're going to want to stick around for that. It should be an exciting video. So I'll be right back.
Welcome to Day Trading for Success. Every morning, join the professor, a former math teacher turned pro trader, and watch him trade live for free, sharing proven strategies, breakthrough indicators, and lessons from essential trading books. The professor is not a licensed financial advisor. Consult a licensed financial advisor before following any demonstrations you see here. Subscribe now and click the notification bell so you never miss a live session.
Hey, welcome back, everybody. So let's start off with saying how we did today. So today we got $489 on CoreWeave, and then, oops, not this. And then we lost, did I get anything on Hood? No, I didn't get anything on Hood. I think it was NVIDIA. And I lost $222. So we ended up with $260 for the day. Our goal was 150, so we'll keep it on the green pretty day, and that's how we did. Now this is a layout that you'll see me trade a lot when I trade live. When I switch over to the other channel where I'm going to be a guest trader, this is going to change. This will not be the same layout. That's some of the stuff we've been discussing that I didn't want to really change it, but we're going to change it, and we're going to go over that a little bit right now, what you should expect to see as I trade on the other channel and help to promote that channel. So you know, I just want to make sure I point out, hopefully most of you are watching this, that I probably will wait until the beginning of next week, the next Monday, before I go over there. So there'll probably be a few more days of live trading on this channel, even during October. And then I'm going to switch over to the other channel where you can see me trade live, and hopefully you'll come along and join me and help that channel and watch some of the videos on that channel. They're supporting me, and I'm a big supporter of them. And then hopefully we'll do really good trading over there, and you can make money over there, right? So remember, I'm not a licensed financial advisor, so you should always seek the advice of someone licensed before you try to follow me or emulate any of the demonstration videos that I give. Trading is risky. Be careful, guys. Okay, so today we ended up pretty darn good. I'm just going to go over with you briefly if you're not used to trading here. It's going to be a short video. We had a catalyst this morning on that, so I typically use Benzinga News Agency. Let me open that up for you. I do have a link to this, and obviously helping me, using my links is helping my channel. But you know, I'll have all these different ones that I use, and I get also the news. And this one was right at the top of the way that I have this set up, and it was very, very helpful for me. So if I click right here, it gives all the news on this. So this is a fantastic tool to have. So I have a link on how to become a member, and if you want to become one, which I advise, make sure that you use my link, please. You also have a lounge and pro chat and everything. Pretty much it'll pay for itself the very first day you're trading just by having this information. So I recommend that. Let me go over the month before I go over the strategy. So here's how we did. The traders that traded along with, this is how I did, and I think most of them did pretty well that traded along with me from the feedback I'm getting. I have a person here, Charlie. She handles the chat for the large share size traders. This was a small share size challenged through the month, more or less. So we didn't really do very big share size to get these totals. And she traded along with me, and then she brought in, so we funded an account for her last month, and then she traded along and did really good. And one day, she traded momentum. I'm in a studio with a lot of other traders, and she did over 2,500 on that day. So she's doing great. Hopefully she won't quit. And but this is, again, that's somebody else who I know did well anyway. But this is, our goal was 150 a day. So there's a few days we didn't make it here. I can see that looking at this. And it was tight a couple of days. I struggled. I mean, this was a big red day that I struggled and came back from. But I managed to stay green every day and get $4,660. The whole idea is if you are retired and you're looking for a conservative way to trade where you're fairly safe, this style that I traded is very conservative for people that scalp. I mean, scalping in itself might not be considered conservative. Trading on a 1-minute chart might not be considered conservative. But once you get the right tools and the right layout, and you trade in a simulator first, 1 minute seems very, very slow taking the trades. You don't necessarily have to take a trade every minute, but I mean, reading the data, having it in front of your face is just so much better, faster than waiting for the bigger moves, in my opinion, as I say. But if you are retired, this is a great added income. If you're just trying to pay your mortgage or pay a car payment, this is going to do it for you. It might not be a living for everybody, obviously, but certainly even this lower share size can augment you. And then I felt fairly safe. I mean, there was a few days in here that I was off, but I came back, and it ended up being a great month. So, hopefully you'll come along and trade live with me, and you can pick up and learn. The whole idea for this channel, Day Trading for Success, is to help you make a living trading. So let me just show you the essence of now this might change slightly when I'm trading live on the new channel. I will trade the rest of the week this way if you're just picking up on this. But what I do is I mark out Fibonacci levels first on a 5-minute 10-day chart. Sorry, I was just thinking like I can't mark this day because this is what happened today. So we'd have to go for this is the high. So we look for the high and the low on a Fibonacci level. So since the day didn't happen yet, I would have marked it out like this. So 114.57. I left click and then take my finger off the mouse and then get up over this high and then left click again. And now I've got your first Fibonacci level, which is going to create channels and areas where I can trade. As you can see, it broke that level here. So the other thing I do is I do that one more time on a 5-minute. So what I'm trying to do is create historical data support and resistance levels. And Fibonacci is a very well respected historical data. So I think what I did here is I marked it off the pre-market high. So I'll do that again here. So we'll go to the low, which is right here, open up the Fibonacci's and get that low at 1950. And then we'll scan over here. I have to use the wheel after I take my finger off the left. We'll go ahead and mark the high like right there. And that will be only a 2-day 5-minute. So I'm going to make it a different color so I know that. Now that would have been data that I could have easily marked before the market opened. And now it's giving me additional channels. So now we have, let's open up the 10-day, and we can see were any of those levels respected as the day started to trade on the fib levels. As you can see, they were clearly respected. It came back and hit that level, came back and hit it again. It's right there right now. It banked off this one a few times, hit it here. Those are just the Fibonacci levels. Typically, and this is why support and resistance are so important to at least make a note of them. You have to use them as guidelines only. They're guidelines because you can't trust them 100%. Now, right now, if you watch the video that I put out yesterday, you can get a free scanner and you can get this indicator for totally free. I'm giving them away for 48 hours. This has got the range of the last 5 candles, which when I trade is very important to look at, the average range of those candles. And then this gives you a target, like if you were to go in long, that's when you should jump out. If you're going to go in short, that's what you jump out. That's how many pennies. This is your average spread, information that I look at all the time. This is an indicator that's very, very handy. I have a whole bunch of other custom indicators that are very handy. You don't need these to trade with me or to trade on your own. I find them very helpful. I code for Thinkorswim on the Charles Schwab brokerage. And I get hired by prop firms to do custom coding for indicators. And a lot of those are available, and I'll show you where you can get those in just a minute. And I have a link to them right on my, it would be great if you go through my, excuse me, my channel, use my link, because then I get some help. You can help me out of it, but help me out a bit. But here is the Scalp Pro meter, which is very, very handy. It shows what's going on inside the candles. When you zoom into a 1 minute chart, which I trade on, you can really see the data more clearly. Every gray line is a half and whole dollar. That's trading with the crowd. And that white arrow is the MACD indicator, which is very, very accurate. If you when you see it, just go the direction of the arrow for a short period of time. It really works out for you. But anyway, at the end of this video, there'll be a link to go to the next video that explains every single one of these indicators. The other thing you would mark on this to help trade this every single day is historical data besides the Fibonacci levels. And what that is just creating support and resistance lines, like just drawing a line. The problem is that we are out of everything. We're way out of everything, right? I mean, there's a little area here. Oh, actually, there is some area right here. So we could look at this, and no, we're not, right? Because we're way up here. I'm just trying to see where we are here. Yeah, I'm sorry, we're way up here. So there is no historical data. We're in the stratosphere. We're in the nosebleed area. So, but normally I would go back and where the stock stopped and abruptly turned around, I would make a note of those areas and mark them, because there's a high probability it will stop there again, at least for a brief period of time, maybe consolidate before it moves on. So having those historical data levels marked out is sort of the essence of the entire strategy that I trade here for this last month. So you can see from reading these, how that would work. Right here in the middle is what we call the market magnet. That's what those red arrows are. There's the actual magnet where price action is drawn to, and the green arrows are half the likelihood up and down, like the middle range. So right now it's below it, so it keeps drawing it back up, drawing it back up. It hit the fib and turned around down here. This would have been fairly easy to call these trades, particularly right in this area to go long. It's still going long. Now, if you think about it, you're always watching the news. So I've got a 1 minute, I've got the news. Down here I have a day that shows these fib on a day. Each one of these equals a day. You've got your ATR levels, another fantastic indicator. This is a free indicator over at the $1 Million Margin Club you could pick up. And then the active trader, the level 2, a 15-minute chart, 5-minute, another 5-minute. This is a 30-minute, a 1 hour, and a 4-hour chart, all minimized in case I need to open them to do some further strategies and support and resistance levels. As you can see, it banked off this market magnet low level again, which is also the 50-cent level, and turned around. So it's created a channel here. You go short, you go long. You go short, you go long. Becomes very, very easy to call these trades. This is when other candles are about to change, these vertical lines, like we just passed a 15-minute. This tells you what directions they were. So a lot of people only trade those time frames. Just all these tricks, guys, that just make it so much easier to profit. So you can expect to see that kind of stuff. So now we did good this month. Now this is where I'm going to be trading. And some of you probably figured that out already. This is another YouTube channel called the $1 Million Margin Club. Okay, and they do a lot of the strategy books that I support, and then they sell a lot of the indicators that I make, and they have a lot of cool videos here, and they have a whole Toolbox series I would recommend watching about all these different indicators. Day Trading Volume 1 started over there years and years ago. This is Trading the Open with all the breakouts, and then you have the John Bull Bear videos, which are fun. You can predict, and then they hired professional actors and have commercials. This is a real company, not like me. So I know they just came out with a new color version of their books too. So what's going to be happening over here, if you're still with me, there's going to be like a giveaway every day I'm over there trading. There's going to be some kind of a giveaway of their products, which is one of the things that I absolutely, I don't want to call it demand, but I insisted on in order to go over there, that I want you guys to benefit if you come over and benefit their channel by watching it. So please, if you come over, prove to me that giving away free stuff to you every day is a really cool thing to do. And watch their, all you got to do is watch their videos. You don't even have to buy the products. It would be good if you bought some of their products, but watching their videos is what we're trying to do, is to build up the subscribers and get them monetized and just make it a more profitable channel. So anything you can do to help them get there. They sell books, they sell custom indicators. That's what they do, and I'm going to help them do that. And you guys supporting me can help them, and I'm going to make sure they give you free stuff. Now we'll go over some of their products, so expect that a little bit like a commercial, sorry, a little bit while I'm over there, but hopefully it'll be beneficial for you guys. So anyway, that's where you can find me, okay? So the $1,000,000-Margin Club, that is their channel, right? Now there's a direct link on my channel to go over there because I'm their brand ambassador, they call me. So the only other people, I'm also a partner with the Benzinga, which I just showed you. And I'm probably going to be doing some other big companies that I believe in. There's all these negotiations. I kid you not, I get 25 emails a week wanting me to co-sponsor people, and I just turn everybody down. I don't even have the time to research if it's nothing personal these people, but unless I'm using the product or believe in the product, I'm not going to do it. So, but anyway, we haven't decided exactly the strategy I'm going to be trading with them. They want me to do right out of the books, and I don't really want to do right out of the books, but certainly some of that's going to be going on. So we'll see how that goes. I know that's been very profitable, and that's what's been delaying me go over there is two things. Exactly what I'm trading when I go there, because I want to keep it kind of freelance. I don't want people to get in trouble and trade 1,000 and 2,000 shares, even though I'm on another channel. And I'm still going to have the same, I'm not a licensed financial advisor, but I want to make sure that you get free stuff. So I want to be able to be free how I want to trade, and I want to make sure you guys get free stuff. So you should definitely come over to get free stuff, which is no longer called swag. I guess it's called merch. That's the date. That's the title now, merch. So come over and get merch, and that won't be until Monday of next week. Now, it might be some days I'm sick or something happened, but for the most part, it's planned on Monday, the beginning of Monday next week. That date is, what is that date? That date next week on Monday is that's Labor Day. It's last month. Monday is the 6th. No, that wouldn't be right. It would be the 13th. Is that right? What is today? No, it's the 6th. I'm sorry. It's the 6th. So Monday the 6th. Aren't we glad I made that easy? Monday the 6th is when you can expect me to be over there unless something weird happens, and I would announce it on my channel. Okay, guys. I hope this was helpful to you. Make sure you check out all my links, and be careful out there. I'll see most of you tomorrow morning. There is no charge to come trade with me, so check it out. You might like the style, and go green out there, guys. See you soon. Hey everybody, this is the professor with Day Trading for Success. Haven't been doing any of the recaps lately. I'm going to show you on the Trader View how we've been doing. And I am trading live most mornings. If you set your alerts on, you should see me come on, and you can trade along live with me for free. So as a lot of people say, follow me. But just be careful. Don't do that too. don't. You're responsible for your own trades. I am not a licensed financial advisor. And here's a disclaimer about that. And there's also one on every video. I do try to follow a basic day trading plan. You can see it right here. And I recommend that you make a plan for yourself. Some of the things that I do differently, besides just the basic stuff like have a max loss per trade, a max loss per day, I only enter in 25% to 50% of my position. And then if the price action goes against me, sometimes I will add as it starts going back in the right direction, not just randomly add, or there's real support or resistance levels depending on whether I'm going short or long. So that's the way I trade, and you need to find the way that you trade. You need to log. If you're nervous and your hands are shaking, that means your share size is too high. And what I mean by log, that means write down your trades. Think about why you took them, why you won, why you lost, what were you thinking, what was the strategy. Have a plan for every trade, when you're going to get in, when you're going to get out, and then wait. Trading is very boring. Even when you're scalping on a 1-minute chart, you're waiting a lot of the time. You'll see on my videos that I'm waiting for the setup, and then I get in. 80 to 90% of the time, it works in my favor. But then if it doesn't, you've got to remember those max losses. You've got to get out and follow your rules. That's the difference between the 5% and the 95% loser. 5% winners, 95% losers. So keep that in mind. So coming up on this video, you can expect to see some live trading this after the stream. If you want to see the stream, go to live on this channel. You see all the streaming videos. So you'll see this morning's stream. And then I traded more after that stream ended, and I got Tesla up to 245, and I ended up making, with our staff here, a little over 150 for the day. So stick around for that coming up in just a minute, and I'll start with an update of how we're doing this month, because we're doing pretty good this month following the simple scalping style. So stick around, guys. I'll be right back. Hey, welcome back, everybody. So, yeah, like I was saying, a scalping style that we have has done this so far. So that's pretty darn good. So one of the days you didn't see me, some of these days you didn't see me live stream a lot. I jumped on later in the afternoon with this, had very risky. I went right in with the max share size of Tesla that you could follow on the PDT rule, which was 250 shares of that stock. And I just did a few trades and did some big money on that day. The rest of these days we struggled along, and we're up to $4,000 for the month. So, most of this you can see on the live stream, some on a recap, some not at all. But most of these you see me trading live. And of course, this is how it gets reported through Charles Schwab on Thinkorswim over to TraderView. So you can see the actual real numbers at the end of the day. And my accuracy is still way up there, well over 80%. I like to trade 90% with this newer strategy with a lower share size. Believe it or not, my accuracy is worse with a lower share size. I think I'm still not trading the way I normally trade, that made me, famous as the quarterback, as calling trades for other traders. I'm still worried about people that are watching me stream, and I'm trading a little different, more conservatively, and I think that makes me become less accurate. But overall, it's been a great month. What's going to come up next that you'll see, I'm going to start the clip right after this that shows how I ended the day trading to get to this amount. So you can see the style of trading. You hear the live talk that I'm talking with other traders. I was trading along with traders that were trading. One was trading as much as 3,000 shares on the same calls that I was making. Sometimes that affects the price action when there's so many traders trading with me, ranging from 500 to 3,000 shares, that you might actually front run what I'm calling. And Zoom has no delay. So I have taken into account over time, if I call a price level, I usually wait a beat to see how the front runners, and they know I do this, how they're going to affect that price. I still think it's the right move, but they may make my entry slightly different. And that's a hard thing to explain or quantify with the viewers, but it is possible, even with a mega cap stock, when the volume is low enough. See, now we're down to 95,000. When you suddenly have 50,000 shares drop in at a certain price, it can manipulate the price action. So trading with people that are registered as large share size traders, and they have alternative routing for the way that their orders are filled. There's Charles Schwab's own dark pools with their own market maker. It's definitely different than how I stream. So just if you're confused by that, that's why people that trade on Zoom with me are all registered large share size traders. And you can do that too if you prove that you can trade that large a share size. So it's a different tax status you have. It's all kinds of different things. And it does affect the way I trade. So, but overall, green is green. The style of scalping works. And that's basically what I teach. And let me just show you basically what that is before I go into the clip. So this is the typical layout that I have, and I'll show you how I set it up. Every morning I have custom scanners that are available for you guys, and I show how I scan for the stocks. And we're in the middle of changing stuff because of the new rule that's changed, or is about to change, because FINRA went ahead and passed that they're going to lower the PDT down from 25K down to 2K. So sometime in the next 30, 60, 90 days, probably before the end of the year, that'll come into effect, and it's going to change everything. But with that in mind, we are looking for sort of different stocks that can be more accessible for people, which is kind of weird because we were trading large cap. But if you had made the 25,000 PDT, that means you could margin up to 100K, and you could afford 100, 200, even 500 shares of some of the biggest stocks out there. And that's what we were trading based on Day Trading Volume 1, which I have a link to, which is the one that changed lives back in 2022. And it's still one of the most widely traded strategies to this day. Everybody has their own strategy, obviously, guys. But let's go into what just before we play the clip of the live trading before the end of the day, before the end of the trading session, let me just show you how every morning, besides finding the stocks, how I would set them up based on this style of scalping. 5-minute, 10-day chart. Auto zoom out. So I have you can see the high there, and the low is over here. Okay, so we're going to mark Fibonacci retracements. So I'll click the 60-cent level there. I'm going to drag this up here and just click it because I'm going to get to the high over here. Now, there's all kinds of ways to set up Fibonacci levels where you're trading off the percentages when they're more likely to turn around. That is not the case with large mega cap trading from Day Trading Volume 1. You're creating channels. So I'm looking for 449.90. I'm going to just change this price right here to 449.90. This will go pretty quick. I'll just show you a quick setup here. All right, now I've created our first channel that we would look at, ceiling, floor. Just that simple. Historical data. Fibs are about as old as historical data as you can get. Ceiling, floor, creating a channel. If it moves down, it's channel hopped. You have a new ceiling and a new floor. Okay, but we want to make it even easier. That's a wide gap. That's almost over $4 right there, right? You want to make sure you can zero in on when to take a trade less than $4 apart. So now let's open a 2-day 5-minute chart, and we're going to do Fibonacci levels again. So there's the high low on a 2-day. So we mark it down here, 421.57. I'm looking off to the right, trying to get the price right. There we go. But it's very sensitive. So now I need 449.90. And there we go. I'm going to make this a different color so I know it's a 2-day channel, a 2-day ceiling and floors, and mark those right there. Okay. So now we have shortened our channels up a bit. And where you see those is on a 1-minute chart. That's where you're trading, right, is on a 1-minute chart. So these are all whole and half dollar levels. That's a script you can get. I have a link to it. You can mark these yourself. This just does it on every stock instantly, and that is where the crowd trades. So that's part of the strategy because you're trying to trade with the crowd. I also have a lot of custom indicators. I'm not going to go on a big, deep thing about the custom indicators, but I will say at the end of this video, you should watch one that's all about the difference the way pro traders trade compared to just the average traders. And they use not only strategies and scalping strategies, but they use indicators. So be careful listening to just any old person on the internet said that indicators are useless. They're usually selling a course or something. But yeah, all indicators is it's helping you see historical data, patterns. That's all. They're helping you recognize patterns. That's it. That's the whole entire mystery of an indicator. So which indicator you think gives you the best historical data? I mean, that's completely up to you as you start to trade and backtest and log your trades and all that. But that's it. That's the mystery. So can you see all that data without an indicator? Some traders can. Some traders see the data that they only want to see without any indicator. But prop firms that have me do coding for the new traders, they want all the chance taken out of it. So when you see a white arrow that's telling you the MACD is saying it's going to go down, you just go short. See how accurate it is? You just go long. You don't have to figure anything else out, right? So it's a good training wheels sort of for them. But let's go back to this 5-minute 10-day chart very briefly, and we'll look to see now. Here we have tighter channels. You can see how it was respected here. Boom, 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 boom. Now it's into this channel. A channel hopped down here, and then it came back up. It hit here. Boom, boom, boom. Didn't quite make it to the top. How could we make that even easier to decide to help us say, when is that going to turn around? Well, you could mark it right there in the middle of the day. That's intraday levels, and a lot of those are respected. But it's better to go back and see. Now, we don't know this is going to happen yet, so let's just pretend we don't see that, right? Let's just get that off the screen, right? That's all we have, right? So now we're looking at historical data. We know that the price range is about here. So let's look to see where the stock stopped and abruptly turned around in the last previous 10 days. Well, right there, that was a turnaround. It might do that again, right? Look at this, completely turned around right there. It might do that again. Then we look right here, look at that. It before it dropped off, it was like, that's a serious resistance. That's right at the fib level, but let's mark it. This one's also almost made the fib, but didn't. So we would sort of smooth it out near the bodies and mark that, right? Now we're marking more. You might not want this many levels, but look at that. Look how many times that level was respected across that day, right? Now the idea is that since it was respecting it right here many times, maybe it's going to do that again. That's a pattern. That's it. It's that simple. I see all these videos that say keep it simple and all that, but it's like there's cherry picking a price level and saying when it gets here, go here. This lets you set it up every day with patterns on any stock. It's not cherry picked. You set it up, you look at it, and it might be respected. They're guidelines. That's it. They're guidelines. Again, some people will say, you don't need to do that. I'm going to know how to do it. Well, maybe they do know. I always say the best trader still hasn't been found. He's still out there somewhere. This is another level, but it's already been picked up right there. See how it came back and respected, so it were consolidated. So let's get a look at the 1 minute and see what did that do for us? Well, look at that channel we made. We didn't know it was going to be there, right? Look at how that tweezer move was made, and it so respected that level right there. So there you go, guys. I mean, that alone, that one level alone was the reason to mark it out, just for that one level. So now we marked, I think, a bunch up here, right? Because we didn't know the price was going to drop down there. But as the day opens, then you can go back and check for more historical data to see like, hey, it's trading down here. Is there maybe some levels now that I know it's down here that I might want to mark that I didn't mark? And there sure as heck are. Look at this one here. Okay, so actually that's already picked up. We did that. But here's one where it stopped dead and turned around. Look at it, if you smooth across all that. Well, let's go further back and see if it's picked up at all. Again, it got smoothed here and there. So that's a real serious level right there, right? You might want to go there to that one. And then I usually don't do post and pre-market. They're not as strong. If I'm desperate, I might do that. But as you can see, you gave us more levels to look at. This gave us more levels to look at as the price gets nearer. Here's another one. Now, you just might respect these. I can see right now that came into serious play where it dipped, stopped, and turned and went right back up. What made it do that? There's liquidity pools there. There's all kinds of things going on. You don't need to know. You don't need to figure it out, right? Because they're there for you. So, you see them now and you go like, hey, that might be respected. These levels might be a place, you might be a winner. Nothing's definite ever. And anybody who says it's definite is selling you something, most likely. But now let's look to see how it tightened it up for us. And how those levels might have been respected. We still didn't get any good levels. There's some down here as we go on through the day here, but they're up here. So you've got a channel right here. This Fibonacci here, and then this historical data, which really you might as well call at the even dollar, 430. This gave you your ceiling and your floor. And then in between, the indicators help you with the whole and half dollars. They help you. So it tightened up that, not much. Tesla's a tough one, you know. But the next thing you would do if you're really getting down and dirty into marking the levels and you're trying to do what I trade is like a recoil strategy where you're waiting for it to get in and you're waiting for the recoil. Like just look at one of these, either the bid or the ask. You look at a price here, like it was 20 cents, right? So if you got in long at 20 cents and it already went up to 19 cents, I call that like it went down, it recoiled up, get out, get out. You don't wait. This actually gives you a target. This is another like a training wheels for prop firm traders if you don't understand level 2 on larger mega cap, which is different than looking at the share size, looking for it to bind up like in momentum. This is a completely different way to read that you should watch the videos because it works. It works. I mean, I have like 400 videos and a lot of them are the RV strategy, so which is kind of what this scalping is taken after. But my point is you're in and out in 10 to 20 cents. First you figure out how far is it really moving, and then you look for the dip based on down and dirty up close data. So I might just call that 50 cent line a line. I might say, well, look, it could dip down that far, the $0.25. So if I go in long down here as it hits here to ride it back up, I know that if it breaks that level, we're hitting new territory. I might want to get out. You know, I set my max loss down here, right? I might actually let it go past it and wait for it to break back up through and then add to my share size knowing it's going the right way and I can make more money or get out faster because my price points become better. Different ways to trade, different level and patience and risk. You have to see what's good for you. You might want to get out at 4 cents and 5 cents with 100 shares or 50 shares and just slowly build your $50 for the day or $100 for the day or $500 for the day. You know, I try to get 5,000 a day. So, you know, I started off with much less than that though, like $100 seemed impossible when I first started to scalp and got away from swing trading. So again, that's the basic strategy though, but again, the risk level's up to you is what I mean to say. But you can tighten up this level. You can see how it's swaling in here. So you have a $0.50 here, right, roughly, and you have a $0.50 here, roughly, and then you've got your other major channels based on better historical data to back up your move. If it breaks through that, you know you're hitting new ground. And I'm not going to break into every single indicator here and how they can really help you, but like I said, look at the video after this. But guys, that's the basic strategy. You can see me streaming for right now, although I'll be changing around different strategies. So don't forget to tune in and watch it and get ready to watch this next clip. You'll see it in action. Okay, guys, thanks for tuning in. All right, so I'm back on. Just had to do something. I made a quick trade there and got up to 182 here.
Reports that he is not rushing decision due to U.S. trade tensions and criticism. From Reuters sources, GOO.
That was a short I took off of this area right here, which is not, that's a intraday level, so it's not really, I mean, it seems to be respecting it, but I wouldn't trust it for very long here, so. But the 428 I will. I'll go short off the 428 to try to catch a recoil on 100 shares and be prepared to add to my share size up to 200 if there's an opportunity to do so. Tried to get in, got in. It hurt me right away. To add to my share size here, I'm going to have to do market. Oops. So, holding that even dollar, which is not great news for me because I'm right below it. I thought I got it at the even dollar. I see now that I didn't. So it gave me a really bad fill on when I hit the ask, unfortunately. So that's going to hurt my position here. So sometimes when you get a bad position, it's better just to take the loss right away. I'm not doing that. I'm actually going to add to it up here. So it's 57, 60, 60. I'm going to do it off that 70 level. So now I'm up to 24 now, 24 cents, and I'm looking to buy out. Oh, it's hurting me.